Okay, good day and welcome to the Mining Investment Summit 2020. I'm Nathaniel, in charge of handling Bitmain's international marketing, and I'll be your host for this lovely day. This event is proudly hosted by Bitmain and Matrixport, with the goal of providing miners and investors rich insights and meaningful tips to the future of mining. As we all know, Bitmain is the industry leader in the production of ASIC mining hardware under the Antminer brand. Matrixport is your one-stop digital asset financial service gateway, which allows you to trade, custody, invest, and borrow crypto assets all in one stop. In this event, we'll be having three main speeches and three epic panel discussions that brings the leaders of the mining space together to share their thoughts and ideas with everyone. And during this event, we'll also be having an ongoing Q&A session. So if you see your screens, there should be a function there showing that there's a Q&A function. So speakers and participants will all have the chance to join these discussions. At the end of the third panel discussion, we will allot some time to answer more questions. So before we begin, we'd like to thank all the speakers, media partners, and attendees that have taken the time to join this online summit. So now I'd like to introduce Cynthia Wu, Head of BD and Sales of Matrixport, to give the opening remarks.
Hello, can you hear me? Great. Hi, thanks, Nathaniel. Friends of Bitmain and Matrixport, mining enthusiasts, media partners, ladies and gentlemen, thank you for taking part of Mining and Investment Summit 2020 today. I'm Cynthia Wu, Head of Business Development and Sales at Matrixport. It's my great honor to be here to deliver this welcome message on behalf of Matrixport and other hosts of tonight, Bitmain, to welcome everyone from different parts of the world to join our online event. And also, before everything starts, I would like to thank our very capable international marketing teams to put this together under a very short period of time. Year 2020 has been a difficult year for many, but undoubtedly marked a challenging yet exciting year for the crypto industry, particularly mining. We have seen one of the worst and unexpected flash crash in March, but also witnessed a strong resilience of this asset class post-crisis. And now it ends the year on a high note, hitting higher than many of us might have expected at the beginning of this year. So now, standing at almost the last month of 2020, if we look back, ladies and gentlemen, I want to say we've made real progress and adoption this year. With US-listed company MicroStrategy started to hold 1% of their company treasury in Bitcoin, we know this sets a new standard for corporate capital allocation, and others will follow. With payment giant PayPal supports crypto purchase and payment with crypto, it adds 300 million potential new retails and 26 million merchants to the picture. We know the network effect will only accelerate. With JP Morgan's latest report shows institutional investor moving from gold ETFs to Bitcoin. We can see the Bitcoin demand is driven not only by millennium retail investors, but also by institutional investors, such as family offices and asset managers. The targeted audience for crypto asset is growing fast and steady. And by the way, for Bitcoin to really take over gold ETF's 2.6 trillion AUM, BTC price still has another 7 times to go. The picture looks pretty interesting from the demand side, isn't it? On the supply side, we have seen the acceleration of large-scale mining in North America and the adoption of greener energy like natural gas and shale gas. We have seen players from the CIS regions continue to work on driving economic scales, and we have witnessed China's mining community demonstrate its vitality and cost effectiveness. At today's summit, we bring together some of the world's most representative voices and deepest expertise in mining industry from China, US, Canada, Russia, Kazakhstan, Middle East, and so on. It's a good representation of the East and the West. To kick off, I would like to seize this opportunity to ask a few questions which I personally care a lot, and I hope to get a good takeaways from today's speakers. So my first question is to Bitmain. I would like to know that in 2020, what is the distribution of buyers, your buyers, in terms of percentage by each region? And my next question is to the mining farms and mining companies around the globe. What is the cost of mining and the biggest opportunity people should know about mining in your region? I'm also curious, is there any new technologies or types of energies that has helped driving the cost of mining low or make mining more sustainable and eco-friendly? And my next question is to the players who have taken their debut in 2020. I want to ask, why 2020 and why mining? And how do you think the institutional mining space will evolve from here? And what kind of institutions are getting most interested in crypto mining in the past year and why? For retail mining platforms, I want to check with you, does opportunities still stand for retail miners when the landscape gets more concentrated? What kind of services will retailers need to better position themselves in this game? And for financial service providers, what are the popular financial service and products that's available for miners to help them to hedge their risks and add leverages? I know I have many questions, and I know some of you have answers that I don't. And I hope that at the end of this event, we'll all have more clarity on these topics. If you also have your questions to ask, please do feel free to drop your questions in the Zoom chat room. Our team will pick it up and get it answered during the Q&A session. We also have created a Telegram group especially for this summit. So it's on my backdrop, there's a QR code. So you can scan the QR code and join this Telegram group. It will be a good way to keep in touch after the event. Okay, without further ado, let's hear from our first speaker, Mr. Su Ke, Sales Director of Antminer, Bitmain. Su Ke is covering EMEA and CIS regions for Antminer. He's definitely an expert of the regions, and he will update us about Bitmain's latest innovations that were released during year 2020. Welcome, Su Ke.
Thank you, Cecilia. And hello, guys. It's my pleasure to meet you all here. This is Suk, and from Bitmain, I'm responsible for the EMEA and CIS region for the miners. I think probably some people of you heard about me or know me, but most of them, maybe most of you do not know me. But whatever, I would say after the meeting today, we'll be friends, and we all joined this, a great summit for this mining and crypto event. So I think after this, we'll be very friendly, talking to each other. And I would say, it's a right time. It's the right time for this summit to be held at tonight, because I think all of you are excited because the BTC price just rise over than 19,000 US dollar. And this is, after almost 3 years, this is the first time of the BTC price rise up to 19,000. And also, I hope that right after this event, it's just about 3-4 hours, maybe we can see a new miracle on the BTC price. And back to my topic, I want to just share you something about the innovations of Bitmain. But before I start that, I would make something that I would say thank you to all of you, and I appreciate for all your passions in the past. And maybe, as you know, in the couple of months ago, there's something happened in our company, and many of our customers and partners, they were worried, and they are thinking if Bitmain can be continued, or it will be that crash. But fortunately, we passed through that tough period, and we get strong and even stronger than before. And we continued our business, and we expanded our business in a very good scale. And all of the things that we have been done and we are doing, that's we need to appreciate all of our customer and partner supports, which is yours. So this is my grateful to all of you before my speech. And now I just want to share you something um, regarding what we are doing and what we are going to do for the mining sector. And I think because you see the BTC price for recent months, it's rising too fast and too much. It's we were not expected it will rise more than 13,000 in a short time. But you know, it's higher than 13,000 and then quickly to be 15,000, 17,000, 18,000, and now 19,000. And we can expecting the 2020, no, sorry, 20,000 for very short time. So you can imagine what I bring to you is the most powerful miner in the market, which is miner 19 series. And for this one, I think this is a new miner, but also my old miner because this miner was released in May this year, and we paused the shipment because of the bad things happening in our company. But fortunately, we restarted and we restored the production starting from August and back to normal in September. And now all the past miners has been shipped out and all the shipment now is become normal. So you guys will be happy and we are also happy that we can ship our best product to you. And with this most powerful and most efficient miners that you can enjoy the BTC mining a lot. But sometimes some people of you maybe will ask, how can I get it? And you guys have sold out. Yeah, I would say because of the hot market. We sold out for December batch, January batch, and then February batch, March. So you will ask when it will be available. So I would say, unfortunately, for this year, probably there's no longer 19 series available. And next batch probably will be in May or June. And it will be released later on. But don't be sad. Don't feel any pity. We will not let you miss this huge mining festival when the BTC price makes the record. That this is what things I want to bring to you. Now we are also, people saying, okay, you said your company back to normal status, and but we don't know if you can also continually to provide a stable supply on the miners. And you just said that 19 series has been sold out even for next May, and what we can give. And you say you have a good relationship with chipset vendor. How to prove it? So this is what we are going to provide you and to market. That we are launching a new model named S19J and S19J Pro. By this product, this is a special offer from our supplier TSMC, and we are negotiating with them about some external chipset supply. And with these chipsets, we have some special, I would say, mature design on that. So with this product, you can see the hash rate is also as high as S19 series. It provides, for example, S19J. It provides 19 terahash in total, and power efficiency is around 34 J per terahash. And also for S19J Pro, you can see it's almost the same product, or I would say the same quantity as S19 Pro. So with the best power efficiency of 30 J per terahash. So this is also amazing product. And you may ask when it will be available. So we'll bring you these products in next June for Chinese market and next July for overseas market. And so everything is right ongoing. And I would say maybe after, but I can tell you one story. When we released the March batch, and just within almost 1 hour, all the products sold out. And in the second day, we released the April batch, and in 1 day, sold out. The market was too hot, even hotter than our expectation. So this product has been released yesterday and open for sales. And I would say be hurry. I'm afraid that because if tonight's the BTC price will be break the 20,000 US dollar, I think the demands from the market will be huge, So just think about that and make some quick question decision. And if we have back to normal status and we feel also sorry for all the inconvenience in the past to our customer and partner. And we have the confidence to bring the best products and most reliable products to you. So we are so confident to do that we just released a new policy on warranty. So as you know, that in the past we provide 6 months warranty for our miners. But starting from 19 series, we proudly announced that we will extend the warranty for all 19 series from 6 months to 12 months, which is 1 year. So we are so confident that this is a very stable and reliable products in market. And all the customers who is now using these products, their feedback is so positive. And so we also want to bring this additional benefits to you. So no worry about if you have already bought S19 series in the past, or you are going to buy something, no matter. This policy will be available for all the 19 series, whatever it's shipped or the future goods. So enjoy this special offer from us on that. Besides the lighting, and you guys will say, okay, I say it's quite good, fantastic, and it's my mining farm can upgrade now, and I can upgrade with I can upgrade my S9, S11, S15 with S19 or something. But you guys sold out, and it's a traditional mining, and the market is changing. What should Bitmain doing or has been done to make yourself more suitable for the change of the market? What's the change of the market? And I think here, because there's a lot of customers and mining farms that you have joined this event, you see that in the past, there's many individual miners. They have maybe dozens of miners, hundreds of miners. But now, most of mining farms are starting from thousands units. They have thousands of miners, even dozens of thousands. And this has become bigger. And they are asking for much more powerful products. And one single miner is just 100 terahash or 90 terahash or whatever. It's too small. And we have a better environment of mining farm. We can use the IDC. We want real powerful at a petahash level. So this is what we are going to do. We are redefining BTC mining with a brand new product named Antrak. For Antrak, you can see here, it's a cabinet-based miner. It looks like the blade server in traditional, like blade server. And also this is a next level computing power that brings you at the petahash level. And all the design is modular. So it means that in the past, If you guys remember, still remember that's from S9 to S11, the huge change that from one single unit to be a double size, and you need to modify the cabinets and modify your mining farm a lot. But now, if you have IDC, and you can directly use this standard rack mount device. And so just buy the chassis and put in RAM and done. Not only modular design, because of the modular design, it means that hot plug and also upgradable. So it means that now we provide you 7 nanometer. In the future, if you want to use 5 nanometer and even 3 nanometer, that will be not a problem. You needn't to throw away your chassis and buy the new one and upgrade in the rack. No need to do like this. You just need to swap the hash board. You can keep your chassis, keep your fans, keep your power supply, keep your control board, but just upgrade with the hash board. So it can saving your invest and keep your invest more longer lifetime. And also because thanks to the redundancy design, for example, the fans or the power supply now can be there's like N+1. We provide 3+1 redundancy. So it means that even there's a failure on the power supply, the miner can continue to work and send an alarm to the management console. So in that case, if you found that there's any failure, you can easily go there, swap, pull it out, and use a new one, insert, and it's done. So the mining will become more easy and manageable. So in this case, we provide not only the air cooling, but also we provide the liquid cooling. So this is also a very, exciting design. That, for example, in America, in Texas, there's rich power. In Midwest, there's also a lot of gas, and they can generate powers. But the problem is about the high temperature. And also maybe the dust environments. And how can we running more stable, more powerfully, and more efficiently in this kind of areas? So I think the on-rack with the liquid cooling will be the perfect solution for this region to use the cheap electricity, a better cooling system, and also a longer lifetime. Because the liquid cooling system, everything is closed. So it means that it will be affected by environment less and less. So it means that the failure rate of this product will be much more lower. So this is on-rack. It will be available starting from next May. And in earlier time, I think by end of this year, we will release more details on specifications, delivery time, and also price information on that. And by the early next year, we can provide you some demo machines. So I think you will feel real exciting, and you will have enough time to think where to use it and if it will be suitable for you or not. So this is what I want to bring to you from our side. And we never stop our steps moving forward to explore the future technology, to explore the advanced technology, and to make your mining experience much more better and easier. This is what we are looking for. And I hope after this event, you can have a better mine result with a better BTC price. And thank you for this part. And I just also want to see if you have any questions, maybe you can send in the chat room. Okay, And so Justin.
Okay, thank you, Suk. So Bitmain continues to be an innovator and a leader in the mining space. I'm sure that the mining industry will continue to evolve, becoming more efficient as we move on to the future, just like our miners. For our next speaker,
Oh,
I'd like to call once again. Oh,
sorry, Justin. I just saw some questions here in the
oh,
chat.
I'm sorry. I
Yeah.
thought you're.
Yeah. First one is from one of the customers saying, what's the power consumption for on-rack? It's about 6K watt to 7 to 5K watts. It's according to the configuration because it's one single rack supports up to 4 chassis. And so it's according to your configuration for one single chassis. And for the rack, it will be available for demo. For demo, it will be available, I think, in next February or March. And for scale deployments, it will be in May. I think it will be in May. Are those new machines compatible with clients who don't have massive farms? I think for on-rack, this one is a brand new design. I mean, it's totally different from the traditional miner. And this product is much more suitable for the IDC, the traditional IDC. And for mining farm, I think you need to modify it a little bit. So, but if you have IDC, I think it's a better way to deploy it, and it will be much more easier. And you just need to change something like the air cooling, or if you want to use a liquid cooling, and just change some pipe and layouts of the water pipe. Single power cable. I think for this one, it's because it has full power supply. Each power supply has a connection to the power. And actually, 3 power supply is good enough to support the machine for running. And the fourth one is for redundancy. And you can, but for sure, if you want to cost saving, you just need to install 3. But if you want to get some redundancy, you need to connect 4. Okay, Justin, I think now I can give back to you the control this. And if there's any questions, sorry, just the not list. But if you guys have any questions, just drop the
Yeah,
message
thanks.
in the group, and we will record it and just leave your information, the collections, email or WhatsApp, whatever, and we will get in touch with you. And for pricing, it will be um, it will be released, I think, by the end of this year for pricing for the unrank. Now we don't have the pricing yet. And for it's okay, there are someone, sorry, Justin, sorry, there are some new questions here.
No worries. No worries.
Yeah, for S21, okay, you guys know how we name our products. And yeah, we use ever number. And for next products, I think it will be not so soon, not so soon. Maybe I would say maybe second half of next year, maybe S21. If it's named S21, it will come. I can give you another additional information regarding Unrack, because Unrack is a brand new design, and it will be, I would say, hot demands. It's really a lot of demands. Many customers we released in just a couple of days ago, and many customers they are quite interested in these products, and because they want to get huge power, hash power for their mining farm. And as I just mentioned, the first delivery should be in February or March. And for this product, it's for during that time, the delivery is only for demo machine. And I can tell you some internal information that we just planned about 200 units for demos, and it will be limited. not limited on total quantity and also limited for every purchase. So because we want to distribute to more customers and let them feel what's the advantage of new technology. So just be prepared for that. Is liquid cooling standard or and none for the unrack? Yeah, there's two. You can choose air cooling or liquid cooling. And if you choose liquid cooling, it's like a standard configuration. So you need the liquid cooling system, the cycle system. Okay, sorry. According to the time, I think, Justin, do I have time for some?
Yeah, we still have time.
Okay.
A few minutes.
So,
No worries.
Okay. And does it have a longer warranty? Yeah, it's a good question. That's for this one. I would say it's still not defined yet. And we were it just submitted a very good question because considering about this product, we were considering about that and what's a warranty period we should give to this one. No, we haven't divided it yet. The next generation of Antminer will potentially have how much hash rate? It's hard to say. This is but I would say if we are talking about the traditional miner, which is phone looks like the S19. Just personally, I don't have a clear idea on that because it's in very early stage, even just in design. And but just my personal opinion, the total hash power or the maximum hash power will be not increased too much because you can imagine from the technology point of view, from chipset technology point of view, from 7 nanometer to 5 nanometer, it's just improved about 20%. And for this new technology or procedure, it's mainly saving on power consumptions, not on performance. So I'm expecting for the real next generation, the the hash rates will not increase too much, but power consumption, I believe it can be reduced, decreased. Okay. Wow, there's a lot of questions.
I think like because we're reaching the time already. Like after your talk, you could give feedback in the Q&A, or we could also just talk about this more later after the third time.
No problem. Sorry guys, I cannot occupy too much time, but let's just you got my message and you got my information. Just send us your questions and interesting, so we'll get in touch with you. Okay, thank you guys. Thank you, Justin.
All right, thanks, Suk. Yeah, so I think everyone like you could message in the Q&A and Suk could also reply there. So we could do this. As I said, like the Q&A is going to be ongoing for the whole event, so don't worry about it. So I'm going to repeat again what I said a while ago. So thank you again, Suk. So as Bitmain continues to be an innovator and a leader for the mining space, I'm sure that the mining industry will continue to evolve, becoming more efficient as we move on to the future, just like our miners. So for our next speaker, I'd like to call again Cynthia Wu, Head of BD and Sales, together with Eugene Nang, who is the BD Director of Matrix Port. They'll be discussing how miners maximize gains and hedge risks. So welcome.
Thank you, Nathaniel.
Hi guys. Hey.
Hey, am I on? I'm on, right? Okay, let me put on my screen. Great. It's a lot of pressure to speak right after Suka because he definitely get everyone excited. Yeah, so next one, we're going to discuss something that's also very interesting and also hopefully helpful for miners, is that from a financial product and services point of view, what are the solutions or ways or products that's available to help the miner to maximize their gain or hedge their risks? Because we know that this is a very volatile market. So a little bit about myself. I just made my speech, but a little bit more. So I'm the founding partner of Matrix Sports, and I currently is responsible for Matrix Sport overseas business development and sales. That covering all the products. And my background before I joined actually Bitmain in 2018, and then later on we spin off from Bitmain to establish Matrix Sport. Before that, my background is actually in commodities. So I started my career as a physical commodity trader, and then later on move on to Hong Kong Exchange, which is one of the world's leading stock and the future exchange to develop commodity franchise. So in a huge part of my career, been dealing with miners, like from the base metal space, from the dry bulk space, like from the precious metal space. So I feel familiar with the mining community, even though now I'm in definitely a different industry, like dealing with digital asset and the miners in this space. But a lot of things actually are quite similar when it comes to risk management and hedging. Especially, I think it's more so than in traditional commodities because the volatility or in this asset class is just incredible. Um, and also it's so new, right? So I think people are still trying to gain knowledge and gain experience in how to really make use of this financial instrument to help with their production. And so today's the presentation will be, I will speak the first half, and my colleague Eugene, who's also a very important member of the team, is going to speak the second half. So Eugene comes from background of investment bank, so he has extensive sales and trading background experience from top tier one investment banks before. So I'm sure combining our knowledge and experience here, feel free to ask us questions after this presentation. So a little bit about Matrixport. As you probably already know, Matrixport was a spin-off from Bitmain in 2019. And we aim to provide a one-stop crypto financial services for miners and for financial institutions, for high net worth individuals, and for retailers who can trade and custody, who can invest and borrow crypto asset from us. So the firm has been running for almost 2 years, and we continue to execute our vision, which is to enable a more open and equal financial system using the blockchain technologies. The founders, they must look very familiar. So Jihan and John, they were the founder of Matrixport, and you probably recognize that they were also 2 out of the 3 co-founders of Bitmain. And we're lucky that we've been blessed by some of the top investors in the East and the West. So currently, Matrixport is 170 people globally. We're based globally headquartered in Singapore. We have offices in Hong Kong. We have 3 development centers in China. We have a small office in Zurich, and also established our presence in Russia at the beginning of this year. In terms of the team's expertise, really, since we're providing the crypto financial services, that we have, the team has a very good background from the traditional financial services sector, as I mentioned, from the tier 1 banks, exchanges, and also trading houses. And on the tech side, which is also another cornerstone of our offering, we have of the people from traditional internet companies, hardware companies, and also blockchain tech. And also we have a good compliance team, which help us to adhere to the compliance standards, regulatory compliance standards in the places that we operate. Yeah, so I'm going to dive into today's topic, risk management for miners. I think one risk really is when market draws down, like what happened in March, or even to a lesser extent when there's a big correction. How do we protect ourselves against this kind of situation? Because the best financial advice is that we hope for the best but plan for the worst, right? So I think when price goes up to 18,000, or probably going to surpass 20,000 very soon, I mean everyone's happy, right? But what if that there's a certain days that there's a big drawdown in market? What is the best strategy? So I'm going to share a few solutions, which are the miners that I know have been using a lot, which we know that from the trading volumes on our platform, we can know like what are the popular strategies or products that people use most often. And we do get some feedbacks from the first-hand users. A lot of them are miners. So I'm going to share with some of the popular ones that we have seen. So the first strategy is called hedging, right? Hedging with leverage bear. I'm going to explain what is that. The hedging really is, if you think of hedging, it's really a trade-off between risk and reward, right? So if you want to take less risk, sometimes you will need to take less reward, right? So you give up some of your reward. So that's exactly the meaning of hedging. It's by gaining some, but also giving up some. So let's take a real world example, right? So now the price is at actually 19,000, right? But I made this slides a few days ago, so it was still at 18,000. And for a miner, you are constantly reward the mining reward, right? So receive the mining reward, right? So let's say in the next 15 days, you are going to produce like 5 BTC during that period of time. But you feel the market is softening and you worry that the price might drop drastically, right? So what you need to do, what you can do now, right? You know that you have this 5 BTC that in expectation, and you can hedge your position at this market, well, by selling 5 BTC at today's price, which is a good price, right? But you only have 1 BTC right now because the 4 is still on the way. So what do? You can borrow to short, right? You can pay a small interest to someone who can lend you 4 BTC, so that you have a 5 BTC, which means that you are taking a 5-time leverage because you only have 1 right now, right? So you can borrow 4 BTC, you can sell them all at 18,000. Let's say after 15 days, the price actually dropped as you expected, and then you can actually, let's say, to 15,000. You can actually buy back the 4 borrow BTC at a cheaper price, right? You can buy it back at 15,000, and then that costs you 60K. And then you can return the 4 borrow BTC to whoever who lend you that, and then you still make a net profit of 12,000, right? And also you pay a small interest, which is going to be very low, right? In this case, it's only going to be less than 200. So it's a pretty good investment, pretty good trade, right? To hedge yourself against potential market drawdown. There are a couple of so this is what we call leverage bear, right? So you take leverage and your view is bearish. And of course, there's another version of this product which is on the flip side. There's leverage bull, and you can also be very bullish about market, and you can take a leverage to add your to basically multiply your gain, right, when the market actually goes up. So there's 2 versions of it. During the past few weeks, we definitely see a lot of people are trading this. I congratulate those who take leverage bull because they made very good money. But I think for those who take leverage bear, I think they do have this mind of hedging. I wouldn't say that they're right every time, but when they're right, I mean, they probably save their jackets, right? So there are a couple of benefits of doing this with Mitch Report. One is that we have an app where on this app you can just click. It's like a one-click experience to add the leverage ratio to the extent you want it. So it's ranging from 1.1 times to 5 times maximum. So you can choose any leverage during this within this range, and you just click, and then you basically get you into the position. And also you need to pay a small interest, as I mentioned, 6% to borrow the coin, right? So it is a pay as you go because we charge the interest on hourly basis. So let's say you want to close out after 3 hours, you only pay 3 hours interest rate. We wouldn't charge you the full day's interest rate. So actually the cost is quite minimal. And also we have a very, very robust risk management system which controls the risk. So to give you remind you what your position is like, and what is margin call line. So you will get the notifications. Compare ourselves, which is in the highlighted part, to some other platform that we know in the market, which could be major exchanges or other financial platforms. You can see that our cost of borrowing is actually very low. Like for stable coins, 10% annual for 10% per annum, right? For Bitcoin, Ethereum is 6%. So that's and I mentioned the interest accrue hourly. So it's actually a very competitive rate. And in terms of leverage, we support up to 5 times, so which is not too a lot, but it's I think it's enough for most of the miners for their hedging purpose. And also another way, which is a simple way for you to protect the downside, is really like buy an insurance, right? Translate it into financial terms is like you can buy a protected put. You can simply buy a put. I think purchasing investment is very common for mankind, right? Like when we are not sure what's going to happen in the future, but we want to protect ourselves against bad things happening, we buy insurance. And bad things happening for miners normally is like either the the market, the Bitcoin price crash below their cost of production, or it could mean that they want to make at least 100% profit. Right now they're making 70% profit because the price drops. That's also not good, right? They want to make sure that they make as much as they expected before they came to the game. So let's put another example, right? Let's say today the price is such, and you want to buy an insurance to protect your profit. And for you as a miner, your cost of mining is 7,000. I think a lot of you actually have cost below that below this line. So congratulations. You will produce 5 BTC throughout the next month. And you want to make sure that you have at least a 7,000 profit margin guaranteed. So you want to make sure that no matter what happened, how market moves, you want to make at least you want at least sell your Bitcoin at 14,000, which meaning double your cost of protection. So what you can do is that you can simply buy a Bitcoin put option with a struck price 14,000, right, to secure this profit margin. Let's say with expiration date in a month. So it should be end of December. I have a typo here. You pay a premium of for 5 BTC, you pay a premium of 0.065 in total, which is around $1,200. So that's an insurance premium you pay for get this protection. Let's say by end of next month, the price goes down to 13,000. I hope it doesn't, right? The put option expires in the money, and you will have the right to sell your Bitcoin 5 BTC at 14,000 when market is at 13,000, and you actually make a profit of 5,000, right? And you need to minus your cost of premium, which is a cost of buying that insurance, which is 3,000. So that give you a net profit of that give you a net profit of 3,800 plus securing your profit margin. Yeah. So that's one typical scenario, right? When market crash, what we do, right? Another typical scenario for miners is that market is not moving much, right? Like a few months ago, market was really range bound. It's really a range bound market where markets moves from between 8,000 to 10,000 for quite some time, right? So what do you do if market demonstrate that kind of volatility? Like most of the people want to earn extra BTC, right? Because they don't know when market will go up, but they're sure that in the future market will probably go up. So you actually there's certain strategy that can allow you to earn extra cash flow in Bitcoin. So here we have a product which we call dual currency product. This is a product we launched last October. It's been extremely popular. We've been trading like at least 4 to 5 million dollar notionals of this product on a daily basis. And a lot of these buyers are of this product is minor. So what it helps them to do is the reverse, right? So for protected put, you basically pay a premium and get your downside protected. For this one, if the market is really range bounding, you want to get extra premium as a cash flow. So you sell cover the call, right? Because you already have Bitcoin in hand. So let's take another example. Let's say you have a cost of production, again, 7,000, and you don't mind sell your Bitcoin when it hits 22,000, right? Because it's a pretty good level, right? It's more than 3 times. And that's a good level that you don't mind taking profit. Or if it doesn't get sold, you want to accumulate more Bitcoin. You actually can achieve that through the dual currency product, right? So on the right, I'm putting an example which I captured on my screenshot on my phone before this event. So let's say look at all these offerings, right? I want to be a little bit more conservative. I want to take this one with the link price 22,000 and the annualized yield 13.6.5%, and the tenor is 10 days. So what does this mean? It means that at the end of the 10 days, which is 4th of December, there's going to be two outcomes. There's only going to be two outcomes. Either the price on that day at expiry is going to be lower than 22,000, lower than the link price, or it's going to be higher or equal to 22,000. There's no other outcome, right? So let's discuss these two potential outcomes. So if you invest in one Bitcoin, you're going to get 36.5% annualized yield. For 10 days, it's 1%, right? It's 1%. So if the market is going to be lower than 22,000 after 10 days, you're going to get 1.01%. So which means you are getting this annualized yield in Bitcoin, right? You're growing your Bitcoin wealth. But let's say if the settlement price, the spot price on the expiry is greater than 22,000, your principal, so your one Bitcoin is going to be converted into USDC plus interest rate, plus the 30.65% annualized interest rate. So you are in the end you're getting 22,220 USDC, right? So this so some people say, oh, I'm nervous, I never want to sell my Bitcoin. Oh, then this product is probably not for you. But if you're saying, okay, I want to pick a link price at which level I don't mind sell my Bitcoin, but if that doesn't get hit, I also can earn Bitcoin, pretty good interest rate on Bitcoin. Then this price, this is a product for you. So I think during every year, there's also always going to be some period of time where you see this lackluster market price not going anywhere. It's very mildly going up or very mildly going down. So I think that's a time where this kind of product works out best, because you basically get a pretty good decent double-digit yield on your Bitcoin. Also, the cost of selling, the risk of selling your Bitcoin is also very low. And this product is also available in ETH version or USDT and USDC version, so you can get the yield in other type of currency as well. Okay, then there's another scenario where the market is on a roller coaster. It's either going down or going up. It's a one-way trending market, like the past months, right? It's one way up. It's almost like doesn't turn back, right? So what can you do to maximize your returns if market situation is like this? Don't worry, there's another product that could help you to gain good returns. We call it a smart trend, but really it means don't fight against the trend, ride on it. So this kind of product help you to amplify your return in the type of cryptocurrency you invest in when the market is moving in the direction of your prediction. So let's say there's two versions, bearish and bullish, right? If you think the market is going bearish in the next 8 days, 8 days. Sometimes we have 13 days, not typically 8 days or 13 days. If you think market is going down, right, from today's level, you can invest in Bitcoin into this product. And if the market doesn't move anywhere, or it moves against your expectation, let's say it's move up instead, you still get 2% return, annualized return in BTC. So which is pretty good, right? Because if you make your bet wrong, you also don't lose money. You just earn a little bit lower. But if your conviction is correct, it does move and move as much as you expected, then the yield can be amplified to a double digits figure, right? So you can get as much as 17.1% annualized yield on your Bitcoin. So that's pretty good. And the other way is bullish, right? You can also take the other side of the view, and then if you're right, great, you're earning on your Bitcoin. If you're wrong, you're still earning but smaller return. So this is also very popular. We have this product available on Matrixport app every Wednesday and Friday. It's a new release. We just released it for less than 3 weeks, but it's been one of the new favorites from miners. Yeah, I will pass the mic to my colleague Eugene to continue. But if you have any questions for me and for my part of the presentation, feel free to drop me a message. Always happy to have a chat.
Hey guys, hi. Thanks for joining us. I think we're very excited to share with you our products and offering. My name is Eugene, and I think this is one product that is really interesting for mining companies. This is actually one of the reason why I think Matrixport was really birthed, right? We really want to service guys like you guys to help make your business more viable in challenging times like this, right? Not so today, but in March it was really challenging. So I think in scenario 4, it's very clear that there is a desire to not want to sell your Bitcoin, and yet at the same time being able to pay for your working capital, and that's really what we call a collateralized borrow. So what you do is you basically pledge your Bitcoin so that Matrixport would then offer you a USDT or USDC loan so that you can pay for your working capital. So in this diagram, you can see we have basically built an ecosystem around the lending and borrowing platform where we're able to get, institutional funds and high net worth investors, right, to offer the USD stable coins. And then the borrowers like you guys, who are either the mining customers, retail, or even hedge funds, who may necessarily want to borrow because, with the bullish market today, it's kind of very tempting not wanting to sell, right? I think, just being very, constructively, optimistic, I think Bitcoin is, it's easy to see 30, 40, 50,000 next year, right? So I think there is a desire to not want to sell and use those as collateral pledge to borrow more stable coins. And I think one of the things that in a rising market, it kind of make a lot of sense because, if the collateral value goes up, right, you can borrow more, right? Or you can pay down your loan. So with 4 elements, I think in our lending business that we are probably the top 3 in Asia. We focus on security, so we use a custodian wallet that is under a Hong Kong trust, and we engage in superior risk management. Unlike certain players, we generally do not do any or much under collateralized loans. We generally have everything back 1:1. And lastly, the third point I think is that very competitive rates for mining customers because we believe that it's a real great service for us to help them get their working capital desires and needs. And lastly, of course, client relations that we help you to guide you along the journey of borrowing from us. So next slide, please. So this would be a typical loan terms, right? For any mining customer who wants to take a loan from us, right? Generally, the notional currencies It can be in three forms, right? USD, USDT, USDC, generally USD stablecoin. Of course, if there's a desire to have a different currency, speak to us. We'll see if we can fix that for you. And then for the interest rate, typically it's annualized 10 to 12%. And this is really subject to the market conditions. And it's not something which is fixed. So really it depends on, say, if the cost of borrow today is high demand, or say, for example, tenor is a bit longer, we need to price that slightly richer. And in terms of tenor, it typically ranges between 1 to 12 months. And also we have the option for you to do an open term. So an open term is really interesting in the sense that it gives you the flexibility to pay down your loan whenever you want to pay down, right? So for example, right, if you borrowed a loan with Bitcoin collateral at 10,000, right, and now Bitcoin is almost 20,000 as I'm looking, you can literally pay down your loan with half the collateral, right? So there's one example. And then for the underlying collateral, typically, it's our favorite, right, Bitcoin. And then we also do accept other collaterals like Ethereum. From time to time, we can be adventurous, and it really depends on market demand and needs. We do accept other tokens other than Bitcoin and Ethereum. And initial loan to value, that in short, that really means the amount of loan versus over the amount of collateral. So typically we expect an over collateralization of the loan so that we allow you to not be margin call, right? At the end of the day, we want you to be able to sleep well like a baby at night and not necessarily have to receive a phone call from me or from Cynthia, in the middle of the night, waking you up to top up your collateral. So it's really not because we are trying to get more collateral. It's more of a function of risk management and obviously a function of the market volatility. And the next is obviously the custodian platform that I mentioned. And this is really a very indicative term sheet. So if you guys are really interested, speak to one of us, get on the Telegram channel. We'll be available to help dive in more deeply on this topic. Yeah, so I guess the next product, it's also one of our flagship product, and it's a very interesting product. You get to borrow a loan from us at 0 interest rate, and in a way take profit when the Bitcoin level hit your target level, right? I'll go on to the next slide to share with you. Essentially, there's no real free lunch. Okay? The deal here really is the next slide. The deal here really is that should the Bitcoin fall below a certain level, you will potentially lose your Bitcoin collateral. So that's really the risk. But in short, let me go. I'll go into details later. I know it's been almost more than an hour. This is a scenario, and just to give you guys the context, say for example, if the Bitcoin reference price is 18,000, no, I was changing this like early in the morning, and now I think I have to change the reference price. Bitcoin's like moving hysterically. Interest is 0, loan to value is 50%, and your take profit is 25,000, and your protection price is 9,000. And say you need for 4 months, right? Let's move to the next slide. And so in this slide, it's very clear, right? If we show you 3 cases, right? Say at the end of 4 months, right? Or within the period of 4 months, if Bitcoin ever fall below 9,000, which is almost half the price, 50%, you do not have to pay the loan. And what's the risk? The risk is that in return, you will lose the Bitcoin collateral, right? So that's really, I think, the risk, right? You might lose all your Bitcoin. The second scenario, which is I think, in my opinion, quite an ideal scenario, is that if Bitcoin fluctuates between the protection price 9,000 and the take profit price at 25,000, you repay the loan in time with 0 interest, and you can retrieve your Bitcoin collateral. And the last case, if Bitcoin is 25,000 or more, basically we help sell your Bitcoin at $25,000 and use it to pay down your cost of a loan, which is $9,000. And so that leaves you with 16,000, which is a profit, right? So I think in the third scenario, basically what it means is you get to lose and not have the opportunity cost to enjoy further upside in Bitcoin. So in my opinion, I think this product is really a very popular product when we feel like the market is in a very sideways market. You know, it's a very sort of non-trending market. Then engage in this. You know, in my opinion, do a 1 month, 2 months, a shorter dated with more certainty, and I think that that's a really a great product. And for me personally speaking, you know, customers who have been in taking this product, they typically, if they hit scenario 2 or 3, they're kind of happy, you know, because at the end of the day, you do not have to pay any interest. So that's the beauty of this product. Next slide, please. So yeah, I think this is something that is really familiar with you, right? You know, you all, I'm sure everyone has a savings account in your country, right? And you know, a lot of us do not want to sell our crypto, right? We are all, I guess, in my opinion, holders of last resort. So you know, Matrixport is probably one of the most innovative crypto companies in Asia. And I strongly encourage you to take a look at some of our mobile app. You know, the interface really slick. You see, within, I guess, in 5 seconds, you can literally invest, you know, in a fixed income, you know, interest product, right? Today we have, you know, we're paying 4.5% on 180 days on Bitcoin. We're paying 4% on ETH. We're paying 8% on USDC. Nevertheless, you know, we may not necessarily be the highest all the time, but we do have promotions every now and then. And secondly, I think in terms of risk, in terms of the amount of risk management we had, I think we are probably top in class in this space. So clearly you can see from left to right, 3 easy steps. Click on the product that you want, and then you can see the product description. And lastly, boom, you know, put in an amount you want to invest. And next up, you know, you get a screen and say, hey, look, you're invested. So, you know, check this product out. I strongly encourage you to, you know, give Matrixport a shot. Next slide. Yeah, and you know, I've come to the end. I'm sure you guys are excited. You know, we're going on to the panel discussion, and I think those are way more interesting than what we've shared so far. You can, you know, download the Matrixport app through our QR codes. You know, whether it's the Android, iOS, and then you can join a Telegram channel that we have created specially for you, so that if you guys have any questions, you can ask. And you know, without much further ado, I thank you for your time so far and your patience. And we look forward to you know, the next panel, you know, sharing with you more on you know, the mining industry.
All right. Thanks, Eugene. Yeah, I think for this time, like we didn't have much time to answer some panel discussion, some Q&A questions. So we're gonna move on first to the next speaker. So thank you again, Cynthia and Eugene, for sharing what Matrixport can do for miners to maximize gains and hedge risk. Matrixport is really a fast-growing company supporting miners that now offers plenty of services since the time they first began in the industry. So if you have questions for them, again, Eugene said like you could reach out to them in Telegram or just send a chat in the Q&A. So now let's move on to the third main speaker. I'd like to invite Thomas Heller, who is the COO of Compass Mining. He'll be sharing us today the topic on bringing Bitcoin mining to a broader market. Welcome.
Thank you, Nathaniel. Good evening, everybody. It's evening here, 11 p.m. in Vietnam, and very happy to see so many familiar faces. So last year at the Frankfurt event with Bitmain, it was a pleasure to meet so many new mining friends, and then thank you guys for organizing the event today. So I'm going to take a moment to just share my screen. Okay, can you guys see this okay?
Yep.
Okay, fantastic. All right, so just a quick introduction on myself. My name is Thomas. Previously, I was the Global Business Director at F2Pool, and in August, I joined forces with the team at Hashrate, and we've just launched a new mining platform called Compass. So today I'm going to talk a little bit about the landscape of Bitcoin mining in 2020, and also some of the key things we're working towards with Compass. Sorry, my computer is freezing up. 1 minute. There we go. So a few key points in 2020 so far. So the halving passed as expected. There was, lots of movement from miners readjusting, purchasing new hardware, offloading their old hardware. But the key things were that, as any Bitcoin miner would tell you, things like a mining death spiral are not something that would actually happen. We reached a peak of 17 cents per terahash per day in Feb. Post-halving, that obviously halved and reached a low of 7 cents in July. But over the past couple months, we've seen a lot of bullish action on the price, which also means a lot of activity in the ASIC miner markets. Now, this is particularly interesting because this year, the leading manufacturers, MicroBT, Bitmain, and Canaan, have not been able to produce as many machines as they did last year. So last year, we saw huge increases in network hash rate. I think from early 2019, it was around 40 exahash, and to the end of the year was in the 120s. So this year we haven't seen as much growth. However, there's such a huge demand from the mining community for purchasing miners. So actually those three manufacturers are pretty much banked back into the middle of next year in terms of new orders. So what that has led to is an increase in demand on the secondary markets. So from Compass, we're seeing an unprecedented amount of used miners changing hands. That includes within China. It also means from China to abroad, and also in all the different mining markets. So it's a very interesting time, and it presents lots of opportunities for different miners to have different strategies. The third point I want to raise is the continued accumulation of Bitcoin and the continued expansion of Bitcoin mining companies in North America, of course globally, but particularly in North America. That is a very positive sign for the industry as we continue to see more geographic distribution of hash rate. And the last interesting point, I remember last year at our event in Frankfurt, everyone was talking about the S9s, talking about post-halving, they're going to be dead, but the S9s are living and hashing as well as any time as before. Some Chinese miners post-halving, they turned off their machines because, post-hydro season, they turned off their machines because the prices were no longer profitable to mine. Most Chinese miners, as the hash rate is huge in China, it's still probably 60, 70% of the overall global hash rate. And Chinese miners now have prices that are a bit higher than kind of global averages. So a lot of those miners turned off the machines. Some of those miners opted to move them abroad, and a lot of them are still in transit now. But with the bullish price action, actually some of them are starting to turn on again. So an S9 right now in China can mine slightly profitably, a couple cents per day profit if required. So it's going to be interesting to see how that continues over the next few months. A lot of machines have been moving to Russia, to the Middle East, and then from the miners in North America, if they're not profitable, they're often opting for South America. So a chart that everyone's very familiar with. So a couple key moments. March 12, with the coronavirus and the global economy shocks, we saw a big drop in the hash rate as profitability went down. We saw another big drop around the halving time. Following the halving, we've seen steady price action. And then this, just over here, at the end of October, is the hydro season ending. So all those Chinese miners turning off and then moving. I expect we're still going to see continued growth of hash rate over the next couple of months. Lots of big companies in China, abroad, the US, everywhere are making orders throughout 2019 into 2020. But I'm not expecting such a huge growth as we saw in 2019, which is music to the ears of many miners. So I'm just going to take a moment to analyze some of the different regions and some of the points I've already touched on. So this is actually a farm in Sichuan that we are mining in. Mining operators are starting to look to diverse their mining portfolio. People have been talking about this every year, but I would say now is the first time that I'm seeing more than small levels of demand. And these miners are looking for locations where it's safe, they can distribute their hash rate, so they're not having a single source of risk for their mining operations. One interesting point, and I know a lot of the firmware guys who are probably watching today would attest to, is that unlike other parts of the world, miners in China are still not utilizing all the tools available to them. Of course, there's cheaper labor, there's access to machines faster, cheaper prices, but for some reason, custom firmware hasn't really picked up over there. And it'll be interesting to see which of the firmware providers will be able to grow the demand there and take advantage of that key market. Okay, Russia and CIS. So this is a facility in Irkutsk in Russia. Things are starting to clear up. In Russia, there is more transparency and clearer legal frameworks. There was an act passed in August 2020, which will be in effect in January 2021, which actually makes exchanging crypto for the local currency illegal. However, it is setting up the framework for foreign companies or international investors to mine and understand the rules and mine in a safe way in Russia, which is a great thing for the industry. Russia is continuing to grow in terms of hash rate share. There is plenty of hydropowered in Irkutsk and other regions, which presents a very unique opportunity for miners from anywhere, but particularly from China to migrate to Russia. Interestingly, from Beijing in China just to Irkutsk, which is the hotbed in Russia, it's only 2 hours by airplane. And of course, now with coronavirus, there's lots of challenges with cross-border travel. But I do believe once that we can pass that, there'll be more cross-border opportunities and deals happening. And also Kazakhstan should definitely be mentioned. Kazakhstan hash rate had huge growth in 2019. Local Kazakh companies, some of the big mining companies abroad, setting up these massive facilities. I traveled there last year twice, and you know, the facilities there are very high standard. It's an interesting place. People often underestimate Kazakhstan. They don't really know much about it, but I expect we'll continue to see growth moving into 2021. And of course, the US. So this is a facility in Washington. You know, a unique thing about the miners that I work with in the US and Canada, they have a strong desire to bring more hash rate locally, also mining pools. So there's, I think DMG announced their Blockseer pool recently, and there's a few other North American big leading companies who are setting up mining pools now. It's going to be very interesting, see how they can shake up the mix with all the other mining pools. And there is, again, huge facilities being built. They're using interesting alternative energy sources. Natural gas is very popular, and we're seeing lots of companies in Texas, Alberta in Canada, setting up these facilities. So there is more options, but it's definitely continuing to see the industrialization of these mining farms. And really, those with lots of capital are taking advantage of these opportunities. And lastly, the Nordic region or Europe, it's been a hotbed of mining for many years now. Sweden, Norway, and Iceland, very quality facilities. And the interesting thing about this region is that especially Sweden and Norway, they have like a spot market for electricity. So there is a lot more variation in the prices, and those who set up, who understand the market and set up the right hedging strategies can actually lock in competitive pricing for long periods of time. And that's something that is a bit untapped right now, I would say. And as any region, there's secondhand machines available, but generally at a price premium compared to other regions. Now, I wanted to share this chart. It's very interesting, and it's something the team at Compass has been dealing with a lot recently. So the orange line is the Bitcoin price, and then we're seeing some average S9 prices in different regions. Now, of course, it is very hard to get accurate historical pricing, but we've been doing our best to capture the information where we can. What I would like to point out is the interesting thing about Russia. So Russia has always had S9s at a price premium compared to all the other regions. And that is because there is enough facilities there that have cheap enough power that S9s have been profitable throughout the year, no matter the halving, no matter the price drops and so forth. So you look at the US and China, they all follow the Bitcoin price, but when the Bitcoin price goes up, we found recently in the last 1 month, lots of those miners moving from China to Russia, importing the machines, and then selling it onto the markets because that's price arbitrage. Just for some context, if a machine is about $40 in China, you can probably get it into to Russia at another $30. So you're hitting it around $70 per unit versus buying directly in Russia for $100 or $90. So there's interesting opportunities on the secondhand market here. So now I'm going to talk a little bit about the vision about why we built Compass. So there's some kind of stark metrics that kind of come into your face. 94.8% of Bitcoin hash rate is using a mining pool based in China. 74.6% of hash rate is using one of the top 6 pools. And estimates from CoinShares and Cambridge previously have suggested the hash rate in China is around 66-65%. Now, this is important because we see decentralization of the mining as a very important factor in the Bitcoin mining ecosystem. It's about, are the mining pools decentralized? If there's 3 or 4 or 5 pools in the same location with 75% of the hash rate, it is a danger sign. We also care about the geographical location, and we also care about the individual ownership of the hash rate, because even you're using a particular pool, even you're in a certain location, if all the hash rate is owned by a few individuals, it is not good for the Bitcoin network. The second thing that was a key driver for us at Compass was it is challenging for new people to enter the ecosystem, and it's also challenging for smaller miners, retail miners. With the industrialization of these mining operations, often these smaller guys, these smaller miners kind of get cut out. They get cut out because of the pricing. They can't get competitive prices. They don't have enough machines or capital to reach MOQs. Then all the logistics, buying machines from China, sourcing them, moving them abroad, making sure, in the US there's the tariffs, in Europe there's VAT, also in Russia and Kazakhstan there's VAT. So there's a lot of nuances that people don't know. People always are looking for the cheapest price, but it's also important to consider all the factors. And then the last thing is that it's very hard, in many cases, it's very hard to know who you're working with, especially in a time in 2020 with the coronavirus having restrictions on international travel. So it's very important that these miners have the opportunity to verify their partners. So this is Compass. So we launched in October. It's a Bitcoin mining and hosting platform. We're helping small, medium, large miners source their hardware, deliver it to them, or deliver it to the facilities that they choose. We have facilities from 7 different countries right now, and we want to make it easier for more people to mine Bitcoin, for more people to know about Bitcoin, and just continue to support the growth of the industry. So just to wrap this up, just to explain to everyone how it kind of works with Compass. Let's say there's Mike. Mike wants to enter Bitcoin mining for the first time. He's been buying Bitcoin before, but he wants to get deeper. He wants to actually create his own, mine his own Bitcoin. So he's here, he wants to purchase 50 new ASICs. So Mike can review the reports from Hashrate, understand the pros and cons of mining in different regions. He can choose a country that satisfies his key requirements. He then chooses a hosting location, works with the team to work out where he wants to host, what hardware he wants to use, new, secondhand, ASIC, GPU, there's these options for him. Then everything end-to-end, door-to-door is covered. The Compass team works with him to fulfill his order, get the machine for where it has to be, handle the logistics, VAT, and duties, which I can really say that it's very complicated and it's very challenging. So if that part is handled, it just takes a lot of relief for the miner. Now, machines arrive up and hashing within 48 hours of arriving at the facility. The miner Mike can set up his pool account, choose the firmware he wants to use, and then monitor his performance through the pool dashboard or the Compass dashboard, succeeding in his objective to accumulate Bitcoin. So this is the model for Compass, and a lot of the people actually in this webinar today, a lot of familiar faces, they have their facilities on Compass, and we're just very grateful to work with lots of great people in the industry. So actually that is all for today. I'm not sure how long that took, but very welcome to accept any questions, and you can reach out to me at any time. So thank you everybody, and I'm looking forward to the rest of the panelists today.
Right, thank you, Thomas. So thanks, Thomas, for broadening our insights in the Bitcoin mining market. Before we move on to the first panel discussion, I'd just like to say thank you to our four speakers again, Suka, Cynthia, Eugene, and Thomas. Indeed, the blockchain industry continues to evolve and mature. With this maturation, we see companies that have been in the space continue to develop, providing better products and services, and also emerging industries that allow us to capitalize into these new areas of investment. Now we begin our first panel. I'd like to introduce Sharif Alyarov, who's a CIS sales manager for Matrixport. He'll be joined by the top leaders of the mining space. So Sharif, welcome, and let's kick off the first panel discussion.
Thank you, Nathaniel, for introduction. Thank you, Thomas, for your good presentation, and thank you, my colleagues, for your good presentation as well. In the panel one, we're gonna talk about mining, about the what's happening on the latest trend. So 2020, as a lot of you guys mentioned, it became very difficult. Personally, I'm in industry since 2014 and used to work in Bitmain as a sales manager, overseas sales manager, and visited myself most of the panel participants today and other mining farm around the world. And we used to travel. We used to travel to some mining conference in San Francisco, to New York conferences, to Moscow, to Chengdu mining conferences, Beijing, and many, many other cities around the world. But this year came very hard. But as we see, the community is growing, the exchange rate is going up, and the sales of miner machines in the Bitmain went till May. And there are a lot of things happening in the world, from east to west, from China till the west coast of United States. So I will introduce you today 5 participants of panel 1, who are actually the owners of the business and who are representative of their region. So I will start, and to avoid mess in the panel, so we will start from east to west, and we will go to questions, and then for everyone could answer the question. Now I will introduce our panelists, and then we will give a few minutes to each of us, each of you, to introduce your companies. So let me introduce first panel participant, Stephen Gao. Mr. Gao, he is from China. He runs a company called One Stop Mining, and I know that he is in industry also for a long time and been working for previously for Bitmain, and now he runs his own business. He built a lot of mining farms. Second participant is Igor Runets. I'm sure you guys also know him. He's from Russia. He runs a mining farm called Bit River. This is probably one of the biggest mining farm in Russia. And the size is not important. The important is the official legislation and the paperwork they provide for their clients. This is more important, where a lot of foreign investors can bring the miners into Russia, because Russia was always a bit dark for a lot of international miners. So his company is bringing more transparency into the mining. Another participant, Dmitry Ivanov, he's the sales and marketing director for a company called Hedge. This company based in Kazakhstan. As Thomas mentioned previously, Kazakhstan is growing, and I know that Dmitry and his partners are running a very big mining farm. I'm looking forward to hear from Dmitry as well about their mining farm. Another our participant is Mr. Munaf Ali. He is from Middle East, and we all know beautiful city Dubai, sunny city Dubai, and we all know that there is a lot of oil and money and the sheikhs and a lot of rich good cars coming from that region, and we also know that there are a lot of investors coming. Unfortunately, the climate of that region do not give them a possibility to build big mining farms, but I know that they are investing heavily, and they put the mining farms in the different parts of the world. So we will listen from Munaf. Another participant is Ben Gagnon. He is from Canada. He represents a very big mining farm in North America called Bit Farms. I'm sure you know guys about it. It's a publicly traded company. And he will talk about the Canadian business, about Canadian rates. It's a perfect place for mining due to the climate, due to the tax policy, and the total situation in country. So, Mr. Gao, please introduce yourself and give us some information about your company.
Hello, everyone. Very happy to meet you on the land. I'm Steve Gao from the onestopmining.com. I founded Onestop Mining in 2017 after I left Bitmain, and now my company selling new and second-hand miners in Alibaba and in our website. And I helped Pooling to build the new miner farm, and I designed a new container and new miner farms in China, and I helped to host them overseas miners in China. So if you had any questions about the mining business about the China, I can help you to clarify all the situations, the policies, regulations in the China. Thanks to everyone. Thanks to Sheriff.
Igor, please introduce yourself and your company as well.
Hello, everyone. It's a great pleasure being here today. So about Bitriver. So we are the largest mining data center in Russia. We're pretty international in terms of our client base. We currently host clients from around 17 countries. Kind of key point of our strategy is to keep our operation sustainable. So we use only excess capacity of hydropower available in Siberia. We have been around since 2015, and our first 100 megawatt facility was launched in 2018. Total capacity of our facilities right now is around 120 megawatt, almost all contracted and running. And we have around 130 megawatt more under construction right now, going online next year.
Perfect. Thank you, Igor. Dmitry, please.
Yes, hello. So I'm here representing Energix. We are a Bitcoin mining and hosting company based in Kazakhstan. The team was formed 4 years ago by Mr. Zhanat Aldebrgenov and Yerbolsin Sarsenov. They built their first mining farm in Karaganda region in 2017, which makes us possibly the oldest mining company in our country. In 2018, we opened a 30 megawatt facility, which was attended by the Prime Minister of Kazakhstan. This facility was filled to full capacity by the end of 2018, at which time it was recognized by President Nursultan Nazarbayev on a national televised address. Probably no other Bitcoin company has seen this level of government support, so we are very fortunate that our government is taking a rather bold and positive stance in regards to digital mining as a form of economic activity. And this year, we finally completed construction and opened our 180 megawatt facility in Ekibastuz, central Kazakhstan. It is one of the largest data centers in the world and can host approximately 50,000 new gen mining rigs.
Thank you, Dmitry. Munaf, please.
Hi, everybody. Hi, Sharif. How are you doing? So look, Phoenix was started by myself and my business partner in around late 2015, early 2016. We were self-miners for ourselves. And obviously with the challenges in Dubai, we very quickly found other jurisdictions that were more favorable for mining. We moved everything across to Canada, and we expanded. Instead of mining just for ourselves and family and friends, we started mining on behalf of high net worth individuals and institutions. And since then, we've grown to a number of locations, and we have now started to diversify outside of Canada, looking at other jurisdictions with our partners in Russia and Eastern Europe. And one of the things that we have looked into, because mining in the Middle East is a bit of a challenge, is we partnered with Bitmain, and we have the distribution. So we have been very fortunate in able to provide our clients with equipment and mining solutions outside of Middle East.
Great. Thank you for that. Ben, please.
Hi, Thanks for having me, Sharif. Hi, my name is Ben Gagnon. I'm with Bitfarms. We're one of the largest publicly traded Bitcoin mining companies in North America. I think we're the largest company by hash rate in Q2. And I think we also have the lowest cost of Bitcoin production from publicly traded North American miners in Q2 as well. So we have the highest efficiency. We have the largest power portfolio that I know of in Canada at 168 megawatts, and something that we're continuing to expand in North America. We're really focused on the institutional side of things. We see that there's a huge trend going towards pockets of capital in the institutional markets, and we're here to provide those institutional investors with a safe and reliable way to invest in Bitcoin mining, through our shares, and have those track the profitability of mining as a proxy.
Thank you. So everyone can see that we really have participants from most of the, all the parts of the world. And now we're going to jump on the questions to let our visitors today understand what is happening in 2020. Where are the rates? What are the prices? What are the design of the mining farm? Are we going for the solid building or quarter, and some other questions? So the first question will go about how is mining developing in your region, especially your region where you are from and where your mining farm is. What is the average mining farm? Because at the beginning, 5 years ago, 4 years ago, the mining farm was sizes for 1 megawatt, 2 megawatt, 3 megawatt. Please let us know, because the equipment is growing, the power consumptions grow. What are the average mining farm now, where the people are ready to build or using how many megawatts? And what are, of course, the electricity costs? What is the electricity cost itself, and what are the hosting prices? I know, especially from Dmitry and some other clients, that the hosting prices was lower a month ago, but now the price go up. What are the recent hosting prices offered to clients? Gao, please.
As to the first question, so I can describe the China's mining situations in 2020. Especially in the Sichuan province, China, the local government published a new legal policy to allow us to build a regular miner farm. So in this year, several big miner farms began to run. So their capacity, most of their capacity, about 100 to 200 megawatts, and they pay tax to the local government, and they buy the electricity from the power grid company. So this miner farm grew up very fast, and now the more and more people want to build the similar miner farms in China, especially in the Sichuan province. Their electricity cost about the 2 cents for the summertime, from May to the October. So they can get the very cheaper price from the China power grid company, about 2 cents. So their hosting price will be this year's their hosting price, including everything, is 3 cents in China. But in winter, this miner farm cannot work. There are no electricity in south of the China in winter, so we have to move the miner to north of the China, especially in the Xinjiang province or in the Mongolia province. So they are neighboring from the Kazakhstan and the Middle East. They use the energy come from the mixed power plants. And they are a lot of the sun power and the wind power and the coal power plants. So the local province, they sell electricity about the 4 cents, around 4 cents. So the hosting price include everything for winter. Now the China's it's 5 cents now, so it's still competitive. I think maybe there are several huge miner farms in Xinjiang. Each farm about 500 to 600 megawatts.
Big, very big.
Yeah, very huge. So this way, these four these 4 miner farms are running now. Now most of them are full. And there are some small mining farms are began to run. Why is the last year the Xinjiang province published some policies. They shut down some miners in some cities, but now the local government allow them to run to make profit because of coronavirus situations. So these small cities government encouraged us to start our miner farm. So they began to run now. So so totally, I can tell I want to introduce the situations for the 2020 and 21 for mining situations in China. The farm, the big farm become more and more. So the farm will be redundant in China, but the miners are less than are not enough to run all of the farms. So the mining price will become cheaper.
Okay, so it seems like coronavirus situation helps business, especially mining business in China, where the government is more flexible and support mining. And big mining farm, as you mentioned, 500, 600 megawatt, it's really huge. Thank you, Mr. Gao, for introduction. We will come back to you a bit later. Igor, please let us know about the latest trends and the questions which I mentioned in Russia about how it's developing, what are the average mining farms currently you see in Russia, what are the electricity costs, and does the hosting do the hosting prices changed?
Yeah, sure. So first of all, as Thomas mentioned earlier, this year is pretty important for mining industry in Russia, as this industry is finally getting properly regulated. Probably regulation is not the most crypto-friendly regulation you would see around the world, but it gives clear framework to miners, to mining data centers, which is great for the industry. Because now there is no questions, is it a gray area, is it white area, it's totally regulated and it's allowed. So this is a very important development, which is new, which is happened several months ago, and we are really excited about that. In terms of development of the whole industry in Russia, it's very active. It's always been very active, and now it's growing even at faster rate. Almost all mining activities in Russia are concentrated around Siberia, in places like Irkutsk region, Krasnoyarsk Krai. That is obvious reason for that. Huge oversupply of cheap hydropower built in Soviet Union era, when dams, hydropower plants already amortized, and energy company doesn't need to include capex in the electricity cost. That allows miners in the region enjoy probably one of the lowest electricity prices in the world. Exact price really depends on the scale of the operation, on the energy procurement strategies, and so on and so forth. But I would say the overall array, range between 2 cents, 2.5 cents, 4 kilowatt hour is the most common in the region. What we really see is that a huge number of relatively small facilities go online all around the place with a capacity of 1 megawatt, 2 megawatt. This is very active and flourishing segment of the industry. At the same time, we also see large data centers going online. So huge variety of sizes and scale of the operations, but geographically, all of them are concentrated in 2 or 3 regions around Lake Baikal, and which is probably pretty unique.
About the power rates.
As I said, power rates and excellent climate for mining operations, because like, for example, in Bratsk, where our facility is located, the annual average temperature is around -2 degrees centigrade, which like allows us to save a lot on cooling. So like I would say that this year and particularly last several months is a very growing time for mining industry in Russia, because like many people see regulatory certainty and going to Russia to enjoy low prices.
Okay, thank you. Dmitry, how is it about business in Kazakhstan? About the rates of hosting prices and the average mining farm size?
Yes, well, it is in active development. It seems that every week that I find a new facility popping up. There was a report released by the Prime Minister's press service that quoted that there are 13 operational mining farms consuming a total of 600 megawatts, an additional 400 construction that are supposed to consume another 450. It is estimated that $180 million have been invested into this industry, and this is expected to go up. From our perspective, we see a lot of sizable facilities appearing around the country. We see, like on Twitter, I saw that Canaan Avalon miners shipped bulk quantities to new mining facilities, which I have not heard of before. So it seems that new mining farms are popping up in areas of the country where power is available, and it looks like a sustained development. In terms of price, I just wanted to point out that Kazakhstan has a large surplus of electric power, stands at 4,000 megawatts, and power is an economic asset of the country. And Kazakhstan is an exporter of power. So, of course, as the government and the power producers are very interested in selling power to the local industries. Before I quote any prices, I just wanted to elaborate that there is, in fact, surplus electric power that's available to large-scale miners, which is an important factor. The actual price of hosting in Kazakhstan, which is calculated in terms of power consumption, is around 4 cents per kilowatt hour. Energix is able to offer wholesale hosting at 3.7 cents, and this price is all in, so it's everything needed to maintain a minimum of 98.5% uptime in the course of the year, and this is just the contractually guaranteed minimum that we say. In reality, it is higher. This price is all year, so it doesn't change, and it's inclusive of all the taxes. This is the end price that the customer is can expect to pay.
And next, we will talk about the taxes. Munaf, can you tell us about how it's going in Middle East? Because for most of us, it's a gray area. I mean, we know, as I mentioned previously, there is a lot of money, but mining is a bit complicated. How you invest, where you put, how you get the money, how you buy the miners, and how you ship them. And whereas if you go, what are the electricity costs you look at and the hosting prices you accept? And what are the sizes for the mining farms you guys use?
Sure, Sharif. So the biggest challenge we have is the cost of electricity and the climate that we have to deal with. As you know, Dubai is a lovely place, but the temperature in summer is extremely high, and it can go to 50 degrees Celsius, and in some cases even higher. So you can imagine what the temperature of a mining farm would be. The other downside problem we have is that electricity is not very cheap. Being a miner and a self-miner and having mined in Dubai, I can tell you that the cost of electricity was around 12 cents. So this was something we didn't sustain for very long, and very quickly we realized we needed to find another jurisdiction. And as I mentioned, we moved everything to Canada. So while we are based in the Middle East and we have lots of Middle East clients, it's not very profitable. And there are small mining farms. So these would be privileged people who have access to very preferential pricing when it comes to electricity, but that would not be on a very large scale. So these people would typically have mining farms of 1 megawatt and below, and at the most I've only seen around 2 megawatts or so. But this is changing because as we're based here in the Middle East, in Dubai, everybody's aware of our presence in the Middle East and in Dubai, and our business is all exported to places like Canada, and now we're looking at diversifying with some of our partners like Bitriver into places like Russia. So
in places like Canada, the electricity price we achieve is between, let's say, 4 to 4.7 cents, depending on the locations that we have. The typical size of our farms there are around 9 to 10 megawatts. And we've been very happy because the climate is ideal, the power prices are good, and we're currently looking at ways to reduce the cost of this by working with not just hydro, but gas people. Because the price of gas is so low, we're able to convert this gas with generators to electricity. So it becomes a very attractive opportunity. And the government obviously is very crypto friendly. But one thing we've noticed over the last 6 to 12 months, as well as having all this institutional demand coming to us and being a Bitmain distributor, it helps our presence in the marketplace. Not only are we seeing more and more institutions globally come to us to purchase machines, to use our hosting services, but we're seeing, governments in the region, especially in the Middle East, approaching us. For example, in Dubai, we have either sovereign wealth funds or government entities, because there is some surplus electricity. The UAE has some nuclear power now, and they're looking at ways of, maybe for the government or some government-related entities, to look at mining farms on a very large scale. So we're looking at 50 megawatts or 100 megawatts plus. So we're exploring, looking at feasibilities, how we're going to be utilizing the power, the cooling challenge that we would have in an environment like Dubai with its climate. So things are progressing. But our focus, what started in Dubai, moved outside to Canada and other jurisdictions, and now we're being sort of pulled back to try and see if we can develop that in the Middle East again.
I think you are the golden client for most of the participants today. They're going to reach you definitely after this call, I'm sure, to bring you to their country and to their mining farms. Ben, can you tell us about, Manaf mentioned that they mine in Canada, but you live there, you grew up there, and you have business there, and I know your farm is one of the biggest in the region. Can you tell us about the average farm size? I remember you had 30, 40 megawatts. Is it increasing? If you look at the new places, you're building 100, like Mr. Gao mentioned, 500, 600 in China. How about the electricity prices, the one you pay to the government and the one you offer to clients? And I know you have some special scheme how you sell your electricity and the hash rate.
So, in Canada, most of the opportunities here, like in most of North America, they exist because we used to have, an industrial base here that got outsourced to Asia or some other market. And then when that happened, no one wanted to invest in that new infrastructure again for several decades and leaving it kind of empty. So the most iconic example of this is there was a hockey stick factory in Quebec that got outsourced out to, I think it was China. It sat empty for 20 years. No one wanted to invest in manufacturing, but then we came around, and now we're mining Bitcoin in a site that used to be manufacturing, hockey sticks, which is pretty part and parcel of what's going on. So most of the mines in Canada are much smaller than, the largest mines that you'll see in Kazakhstan or China. I don't think there's anything even close to a 200 megawatt farm in Canada by any company anywhere. Our largest farm is 30 megawatts, and that's expandable up to 48 megawatts. But most of our sites are 10 megawatts. And I'd say that's true for most sites in Canada are 10 megawatts or under. And there's some certain reasons for that, especially in terms of the nat gas sites. There's different rules if you're at 9.99 megawatts versus 10.01 megawatts. So people will keep their they'll keep their size limited, and they'll have multiple sites in order to save on the permits and the time and the effort in order to get those sites up and running. So generally speaking, much smaller sites in Canada than you've seen in Asia. That being said, there are large scale opportunities that I think will be coming in the future because there's huge industrial sites which have had decreasing demand and decreasing production over the last couple of decades, and eventually that will all get cycled out to some other industry. But the price here is highly variable in Canada. On the high end for grid pricing, most of the miners are paying between 3 and 4 cents for grid pricing, regardless of where they are. If you go with private sources of production, especially on the nat gas side, you can get significantly cheaper but it comes with an increased cost of capital because now you've got to pay for the gen sets and everything else. There is some interesting angle to this, is that I think Canada is probably the best from an ESG angle, where the vast majority of Bitcoin mining being done in Canada is done with hydroelectricity, or it's being done with natural gas that used to be flared or vented. So we've got a situation where people would consider the hydrocarbon neutral, and the natural gas situation is actually should be considered carbon negative because there was a huge output before. And then once they've built on this Bitcoin mining component, they've actually significantly reduced that. All other things remaining consistent. So you can get really good deals in Canada, 2 to 3 cents, depending on your scale.
Thank you, Ben. Yeah, it's already midnight in China, Mr. Gao. I see that you're still with us. Now the price is going up. So whenever price go up, we notice that there are a lot of people want to invest into mining farm. Mining farm will not be able to build in one day or in a month. In some regions it takes months. In some regions it takes years. And we always had a solution, a movable solution, which we were calling containers. And there is, I call it personally, a solid building construction, where we build something actually on the concrete and on the land. Mr. Gao, my question, how are the latest mining farm designs? Where are the people? Are they still willing to use the containers and move it from one side to another side? How about the heating and the air intake or it's the best still is a solid buildings construction in China, in your region? Hello? I think we lost Mr. Gao, so Igor, let's move to Russia and we can talk to Gao a bit later. How about the Russian, about the solution? I know it's cold, the climate is very strong. Are we still, and I know that Russia is mostly using the old Soviet buildings, but what about the container business?
Yeah, sure. So first of all, we have a lot of experience with both solutions, solid buildings and containers. Our 100 megawatt facility is a solid building and recently launched BitPlus. It's a joint venture between BitRiver and ENPlus, the largest private hydro power company in the world. It's containers. If properly ran, both solutions have a good technical quality, can provide good environment. At the same time, we found that for large-scale operations, for like 50 plus megawatt of scale, solid buildings are much more economically viable and efficient solution as compared to containers. Containers might save some time for construction and can allow us to continue building sites during the winter season. We enjoyed that advantage of containers for our BitPlus venture. But overall, for large-scale operations, we see that solid buildings are a little bit more economically efficient. At the same time, containers are more flexible and easier to deploy. So if properly done, both solutions are totally feasible and perfect for operation.
Okay, so we go for Mr. Gao, I see you back, so let's go back, jump to China. You mentioned, I have a question to you. You mentioned about these huge facilities, 500, 600 megawatt. What are they look like and what are they using to build it and how long it will take? And the main question is how much 1 megawatt costs now in China to build from, let's say, middle level of electricity supply, I mean the voltage.
Okay, for the huge miner farms such as 500 megawatts, they should build a huge power substation. So this project will cost half a year at least, half a year to build the power substation. So as to the middle size of the miner farm, it's not necessary to build a new power substation such as 50 megawatts, 100 megawatts. They can use the 35 kilowatts power input. So this, so this building will take us about 2 to 3 months. That's 2 to 3 months to make them ready. So the cost for build this miner farm in China is 1 megawatt around $50,000 at most. $50,000 per megawatt at most. So now China's build miner farm is very quick, and they use the modular design. So the PDU and the racks and the shelves and the power transformers, all of them can become modular, and so and some new design to build the containers. So you can assemble all the components when the containers are arrived to containers arrived at your farm. So you just need to assemble them. So it's very easy to build a miner farm in China now.
Dmitry, I remember you had last year or actually this year finished 150 megawatt mining farm, so it's quite big for your region, and I know it's a solid building construction. How about the movable solution, and what would you tell about the question we talk about?
Well, in our climate, we've definitely give preference to the hangar design. This is partly due to the elements and the very cold air that can be found outside of the facility during winter. So we give preference to the hangar design, and there are several reasons for choosing this design. It looks like the equipment is only located along the perimeter of the hangar, so most of the space is wasted. However, the large volume of space in the center of the hangar makes it possible to recirculate the hot air during the winter. So you mix it with the incoming cold air, which can be extremely cold, maybe negative 30 degrees Celsius. And this enables us to achieve a more suitable operating temperature for the miners during the entire year. It also serves the function of a buffer zone through which air has to pass before getting to the equipment, therefore maximizing the protection from the elements for the equipment.
Okay, thank you very much, Dmitry. Munaf, do you have something to add into this mining farm building construction question?
Yes. So from experience, we started by having fixed locations, which obviously have advantage when it comes to cost and things like this. But then there's a lot of practicality and advantages of having containers, because especially in remote locations. So for example, we use gas sites. So in locations like this, building a hangar structure in the middle of nowhere can be a little bit more difficult. And in the event you want to decide to move your machines to somewhere else, it's a logistical issue to deal with. Whereas if you have these container solutions, they can be transported much more easily. So we have both in our portfolio.
Solutions.
Yeah.
Okay, that's very good. Ben, how about the Quebec?
Yeah, in Quebec. Sorry. I just got a text message. I got my train of thought screwed up here. What was the question again that we're discussing?
The question was about what the mining farm design lately. Is there any new trends in Canada, the movable solution or still the solid construction? I know the climate in Canada probably same as in Russia and in Kazakhstan is very cold, and we just want to hear from you.
I think in the nat gas side, the containers are by far and large preferred. And then in terms of the tapping into the old industrial capacity side, we're converting old facilities, right? So it's a bit of both. It really depends on where you're getting your power. Here in Quebec, we do have a couple of miners that we've operated in containers, but that's more for development and testing. The vast majority of our operations are in bespoke facilities that have been purposely renovated for mining applications. And I think that's very true for all of Canada.
Thank you. My next question to you, all of you guys, will be about the pandemic. The borders are closed. We cannot fly ourselves, but still there is a cargo flights. And so the next one, is there any changes in the legal, as Dmitry mentioned and some other guys today mentioned, that the pandemic helps, makes government more flexible, but is there anything you want to share with us about, is there any changes about the legal status of mining taxation in your region, the import cost, VAT, and do you have any shipping issues? And also the repairs, how do you guys repair the miners? Because the huge miners shipping to Canada, to Russia, to Kazakhstan and other countries, how you ship them back, how you pass these, how you call it, when you need to kill the bacteria or viruses probably on the hashboard. Do you have such issues with that? Gao, you can probably tell us about, you already told that there is some provinces changing the policy, but how about export and import? How about the repair miners during the pandemic? Do you need to follow special rules with the Chinese customs or the special commissions who track the virus spread?
Okay, add to the as the China mining policies, now most of the miners are manufactured in China. So all of our manufacturers and miner manufacturers, they just need to import the ASIC chips from the Taiwan or Korea to China. So ASIC chip is encouraged. ASIC chip is encouraged to import inside China, and there are some free tax to the ASIC chip import. So this is a new policy for now. As to the export miners, so China encouraged us to export miners to outside of China, so there is no limitations to export miners. And inside of China, so because government is very strong to control all of the coronavirus, so we are free to travel easily inside of the China. So miners can transport to from the south of China to north of China very easily and quickly.
Yeah, sorry, we are running out of time. I'm getting some messages that we have. Igor, how about Russia? How do you have any difficulties or changes during this year?
Yeah, I would say that beginning of this year was a little bit challenging in terms of logistics, because coronavirus was a shock for many logistics companies, and they had to change the way they operate. But I would say that since probably May, everything back on track. We don't have any delays in terms of shipments going to our data center, or in terms of way we operate in terms of repairs or receiving goods from our clients. So I would say that right now we do not see any significant differences from a previous year. And there is no logistics delays related to coronavirus right now. So I would say the only significant change is that many of our clients from many countries cannot come and visit our facility in person. So we need to do a lot of video tours and so on and so far. However, in terms of logistics, everything works as usual.
Thank you. Dmitry.
Well, in terms of legal status, we're very fortunate that our country's leadership has been showing support for the Bitcoin mining industry in a very consistent manner. So they legalized this summer, digital mining as an economic activity. And the narrative has been very consistent that this should be a sector to be developed as part of the economic diversification strategy. In terms of transportation, how it would affect, how it was affected by COVID, we haven't noticed any particular delays, but as Igor mentioned, clients wishing to visit the facility could not do so at a time that they wanted. I think that this hopefully will be resolved in the near future. Right now, there is movement across borders, so we are seeing shipping arrangements being made for equipment to be delivered here. So yeah, it looks like it's not stopped, and it looks like it's going to be on its way, hopefully in the beginning of this year, next year.
Great. Munav, how are you feeling in your region? How is it going about the layoff?
Yeah, I mean, we didn't see the COVID corona impact us, especially when it came to the delivery of equipment and stuff, because it would normally follow through right from China to our sites where our clients are based in, let's say, Canada or other locations. So there's no taxes or duties that are paid here in, let's say, Dubai or the UAE. And also there are free zones here. So depending on where you ship it to, there are no taxes applicable. The only issue we had with the coronavirus is that just before the corona pandemic hit, we had sent our staff to China, to Bitmain, to get trained up, because we did open we planned our service and repair center here in Dubai. It's been set up, but with the coronavirus and the pandemic, we haven't staffed and manned it. So that's the only downside. But having said that, being a distributor of Bitmain, and you heard what Suke had to say about extending the warranty, we really haven't had many cases of people complaining about having problems or issues or actually needing to have the after-sales service. So, but we're ready to open that. As soon as the pandemic situation is under control, we will man our service and repair center and be able to service everybody in the region.
How's it going in Canada, Ben?
The situation here in Canada is the government's largely permissive, but not really supportive, right? So there's no real special programs or incentives that the government is providing to try and bring this kind of industry into Canada or scale it up inside Canada. But it largely permits it as long as you check all the boxes, right? And the governmental situation is very different province to province in Canada. The two largest areas are going to be Quebec and Alberta, and completely different requirements, in terms of what you need to do from a tax perspective, from an energy perspective, from a permit perspective. That being said, it's a great region and a jurisdiction to invest in, especially with institutional money, because we do provide, that safety net in terms of, hey, we're a safe jurisdiction. You've got legal remedies here. People know that, they're willing to trade away some of their profits in order for that risk reduction that comes from investing in a safe market and a safe jurisdiction like Canada over, an emerging market in Central Asia or Eastern Europe or something like that. And so that's what we've seen, is that government's not really providing a whole lot of, support, but they're not really getting in our way too much either, especially at the federal level. The roadblocks do come at the provincial level.
Thank you very much, gentlemen. We're really short of time today, and hopefully next time we will have more time to talk and to discuss about our business and our facilities in our region. Nathaniel, please go ahead and introduce the next panel participant.
All right. Thank you, Sharif, and everyone for the first panel discussion. I'm sure everyone's able to get plenty of insights from top mining companies around the world. It's great to see how much new opportunities there are in the mining space, and we will surely look forward to what there is in the future. For our second panel discussion, the topic will be about interesting mining trends in 2020. I'd like to call and introduce Whit Gibbs as a moderator for the panel. He's the CEO of Compass Mining and the host for Hash Rate. Welcome.
Thanks, Nathaniel. Thank you very much. And thank you to Cynthia and her team as well for putting this summit on, all of the speakers so far. Thanks for your participation. It's been absolutely fantastic. So I want to start off with some introductions for the panel. I am joined today by Chase Lockmiller, the founder and CEO of Crusoe Energy, Tim Rainey, CFO of Greenwich Generation, and Steve Barber, the founder of Upstream Data. Trends of 2020, specifically focused on natural gas. Now, all of these gentlemen are mining with natural gas, and it may be same, but different for a lot of you out there. But I wanted to specifically focus on the conversation with these three because they all have a niche within this growing industry, and I am fascinated by it. I think the world is now more focused than ever on mining with natural gas, and it is becoming kind of the gateway drug for large institutions, oil companies, power generators to get involved with Bitcoin. For you guys, Chase, why don't you start? And then we'll go to Tim and then Steve.
It sounds like we're getting some background noise.
I think Dimitri, maybe you need to mute. There we go.
There we go.
Go ahead, Chase.
Whit, thanks for having us here today, and thank you to the Bitmain team and Cynthia, everybody for putting on such a great event, even though we have to do it virtually here. So, sorry, were you wanting? What was the question?
Just an introduction of yourself and an overview of Crusoe.
Oh, sure. Okay. So my name's Chase, founder of Crusoe Energy. Crusoe is focused on trying to unlock value from stranded energy with a focus on flare gas in the oil field with mining and distributed compute. We build mobile modular data centers, deploy them into the oil field. We work with upstream oil and gas companies. And have a reasonably sized mining footprint here in the United States. My background before this, I worked at a cryptocurrency focused hedge fund called Polychain Capital. We're one of the largest hedge funds in the world in the cryptocurrency space. And prior to that, I worked in sort of the algorithmic trading and quantitative finance space. So.
Great. Tim, you want to jump in next?
Yeah, sure. My name is Tim Rainey. I'm the CFO of Greenwich Generation. We are a 106 megawatt natural gas fired power generation facility. We also run our own Bitcoin mining farm. We're a little unique in that we're about a 90-year-old facility. We used to be coal-fired up until the early 2010s when we were purchased by our PE group, Atlas Holdings, and we converted from coal to natural gas with the intention to run as a wholesale power generator. We utilize Bitcoin now as a way to add value for our investors and our employees. It was not the original intention of the investment, but we've pivoted, and it's been a great success for us so far.
Excellent. Last but not least, take it away, Steve.
Hey, Whit. So first of all, I'm having some technical difficulties. It looks like I'm half translucent. Do you guys see that as well?
I like your beard.
Okay. You guys can ignore that. So yeah, my name's Steve Barber. My background, I'm a mechanical engineer. Been working in oil field my whole career. So I guess like Chase, we build distributed data centers here at Upstream Data. We focus on upstream oil and gas wells, particularly like vent gas, flare gas, so wasted gas sources, fugitive emissions, and even stranded gas. So we're based in Canada. Our fab shop's in Alberta. We're actually on the border with Saskatchewan, so we service the Alberta and Saskatchewan area in Canada, as well as we export down to the States as well. So
awesome. All right, well, jumping right into it, first thing that I'd like to know from each of you, I know mining with natural gas is a bit different and provides unique challenges compared to what you would call traditional Bitcoin mining off of renewables or coal. So when you're looking at mining with natural gas or stranded gas, what are some of the unique challenges that you guys face when building out your data centers or your modular units? Chase, why don't we start with you?
Sure. The way that we've built our systems to mine Bitcoin, it's a unique approach because instead of working with the utility to actually purchase power, we are the power company. So we've sort of vertically integrated in that direction. And I think all of us sort of have that sort of similar structure. The challenges are basically, building, operating, maintaining, supporting that whole generation process. What that means is, acquiring, gen sets or turbines, or, depending on the scale in which you're kind of operating to sort of generate the power, staffing the right people in order to support that. In our case, we have a large footprint up in North Dakota and Montana. In those environments, and I think Steve probably faces similar things up in Canada, but you have to deal with a lot of facilities engineering challenges, that are sort of standard on-site oil and gas related issues with, making sure things are heat treated and insulated so gas lines don't freeze up, managing, and then, in particular for us, we're dealing with gas that's coming straight out of the wellhead. And in that case, this isn't pipeline quality gas. This isn't gas that, you would get at your house. So, this is, higher BTU content gas. So you'll have to deal with sort of managing that and, managing ways to generate power from that without, degrading your equipment too badly. And then there's the whole Bitcoin mining process, right? So we, are typically operating in areas that don't have, standard, connectivity. So we have to, work through various, logistical and technical related issues. We've done everything from, using satellite or cell to actually building out, our own fiber network, or, building out, in certain cases for more dense populations, we've built out, our own towers where we've used microwave networks to basically connect our own, footprint. So, wide range of technical solutions that we've sort of implemented to make things happen and replicate the reliability of things that you would see in a traditional fixed data center. So,
sure. Steve, I know that your talk at the Fidelity conference in 2019 was my first actual exposure to your business and what you were working on. How does your model differ from self-mining? It's my understanding that you're placing your hash huts as a service to your clients. You're not mining yourself. Is that correct?
Well, we do a bit of a mix. I guess you'd say first and foremost, like my business is I describe it as a service provider to oil field. So a lot of I'd say most of our revenue is actually sales and distribution of our equipment. And there's a lot of reasons for that, but we do self-mine as well, where we have our own equipment that we finance and work with the producer. A lot of cases, producers generally, they have tons of gas, whether it's stranded or wasted, or even, gas they're selling. But aside from that, they actually have a lot of, equipment and infrastructure like gen sets. In Canada in particular, like in this heavy oil region, producers have, there's some of these producers have hundreds and hundreds of engines just sitting around, right? So in some cases, we deploy our data centers to pair with their equipment. Sometimes that's a sale. So we've sold them the equipment, and we're just like any service provider. We offer, post-sale troubleshooting and the like. But in a lot of cases, they have the gen set, and we supply the data center, and we offer usually some form of revenue share or fixed. Yeah, there's a few different structures, but.
So a follow-up question on that, with obviously if you're self-mining, you don't have to convince anyone of the power of Bitcoin, right? Like it's you and it's your decision, and you want to mine Bitcoin. When you're going out and you're having these conversations to these well owners, how has the conversation changed over the past 12 to 18 months?
Oh, well, yeah, I guess I'll start, but for us, it's way different. I guess when we started sort of advocating for this and, going out there trying to sell our business and sell our product, producers, I mean, even today, sometimes they don't take us too seriously. Like they sort of think it might be a bit of a fad, like this whole Bitcoin mining thing. But more and more, they take it more seriously. Like our best customer right now was a customer that basically turned us away and sort of, didn't understand the value proposition when we first approached them. But now they're our best customer, and I think they're big advocates now for this technology. So I think the work that we've been doing, Crusoe, and there's a bunch of other small outfits, and call it even sort of mom and pop operations. Like I know of many operations where the producer just hired an electrician to build a small rig, and all of that sort of adds to what I've talked before about it as it's improved the credibility of this industry, and so now it's a lot easier today to go into, let's say, sit down in a board meeting with a new producer than it was 2 years ago.
Sure. And Tim, I know you had mentioned that this was something that you had to express to your shareholders and work on getting everyone on board with converting and mining a little bit with the power that you have. How exactly are you guys set up at Greenwich with regards to the power that you're generating and what you're using to mine versus what you're supplying to others?
Yeah, sure. So we have firm transportation connected directly to the Millennium pipeline system, so we're a little different in how we utilize natural gas. This allows us to do a few things. It's Millennium pipeline is very liquid forward market, so we're able to hedge out our input variable costs over multiple years. So right now we have different positions going out all the way to mid 2022. So that's a vehicle that we use to help lock in our mining economics. As far as how we're made up, we about 25% of our overall capacity is dedicated to mining currently, most of which is dedicated to our own miners. We do have one large hosting customer that utilizes about 25% of our mining load. And then the rest of it we utilize for producing, for sending power to the grid when it's needed. So, prior to Bitcoin mining, it would take us about 12 hours to start up and be able to put megawatts to the grid in periods of high demand. And right now we can we could ramp up to our full 100 megawatts within an hour. So this provides, kind of an additional stabilizing impact to the grid, in addition to what we're doing with Bitcoin mining. So we have the Bitcoin mining has allowed us to do a lot of different things, a lot of different unique things, with our business. So that's a kind of how things work for us.
So now, Tim, around the world, there's a lot of repurposing of existing manufacturing sites and facilities. I think of some of the facilities in Kazakhstan and Russia that have been converted. In the United States and North America at large, we're seeing more power generators starting to leverage mining as a way to use some of the energy output that they really don't have a place for now because of COVID. So what are conversations like within the industry? I mean, when you're looking at other power generators, is this something that is it a fad or something that we're seeing you think there's going to be long-term adoption for?
No, I think this is gonna continue to be a trend as as Bitcoin becomes more mainstream, and as the conversations become easier, the conversations are very difficult with convincing some of these traditional power plant operators, that Bitcoin is a thing. That's starting to become easier as we've proven our model. And we feel that because of this, there's definitely some regulatory impacts. Each jurisdiction has their own issues. So we feel like, having gone through the entire process over the course of multiple years, really sets us up in a good position to capitalize on this growing trend.
Yeah, I'm sure all the big money coming into the space and making it public doesn't hurt either, right? That helps everyone's marketing. So one of the questions that is naturally going to come up whenever you talk about natural gas is the decrease in your overall price of power. So let's talk about that. Tim, I know your setup's a little bit different. Chase, let's start with you on this one. When you're mining at the well, how do prices differ? Like what can the average person look at if they're coming onto a well? What's the price per kilowatt hour going to look like when you're factoring in a genset and everything else that's needed?
Yeah, this is something we don't typically talk about too much, but typically, I guess what I would say about it is that we, because the reason is that there's quite a bit of variability depending on the assumptions that you have.
Sure.
As far as ongoing maintenance, with your capital equipment, but the big trade-off that you're making is capex for opex, right? In our case, we're basically outlaying a significant capital expense up front to purchase a natural gas generator. Typically, our value prop, we partner with upstream oil and gas companies and help them reduce their flaring footprint, which is a huge regulatory concern. It's a huge environmental concern, and it's a huge contributor towards the emissions associated with producing oil in the world. I mean, you're looking at globally in 2019, we had about 14.5 billion cubic feet a day of natural gas being flared with no beneficial use. Putting it in terms of power generation capacity, that's something like 60 gigawatts. So it's a really obscene amount of power that's just kind of being wasted. There's a lot of trends that are sort of pushing upstream oil and gas companies to become more efficient with that. You have the World Bank has an initiative to end routine flaring by 2030. You have a lot of, in the United States, there's lots of different regulations that sort of push operators to, control their flaring and their emissions footprint. It's typically regulated on a state-by-state basis. For example, in North Dakota, they have a 91% gas capture rule, which means every upstream oil and gas company has to capture 91% of the gas that they produce across their portfolio, which, it can be a challenge when, pipeline development is incredibly expensive or, logistically very, very complicated. With that sort of relationship in mind, we basically partner with the upstream oil and gas companies and provide them with a solution that is both flexible and modular, and is fast to deploy. That's the other very, very appealing component to it. We can work with companies to anywhere from tens of thousands of cubic feet per day up to millions of cubic feet per day of flare mitigation capacity. I think I love what Steve's been doing. Our business models are slightly different in that I think Steve, as he sort of talked about, is more focused on selling the equipment to the upstream oil and gas provider. Typically, we've found, at least with a lot of our bigger partners, that with the sort of challenging energy economics in the oil industry right now, capital budgets are tight. So we sort of provide a capital light solution to the upstream oil and gas companies, where we can sort of partner with them, come in, provide a service to help them mitigate flaring, enable them to produce oil in a more environmentally friendly capacity, and a more economically viable capacity. And with that, we're able to sort of generate, very low cost power, but it's very, it's not, I don't know.
And I know I put you on the hot seat there. It's a hard.
Yeah, or
Gotcha.
lower.
Gotcha. Yeah, it's. I know it's not always easy to put those numbers on it, but I gotta ask, right? That's something that I think most people view as the most attractive thing about this trend, is that you're getting a lower price per kilowatt hour than is available elsewhere, right? You're looking at hosting in the United States is on average, let's say 5.5 cents per kilowatt hour. And if you're able to find a solution that, taps into natural gas, it can be considerably lower. I don't know, Tim, does that hold true, what I'm saying here?
I think, just the overall theme of utilizing otherwise wasted energy is like a very appealing, place to plug in Bitcoin mining, because
sure,
Bitcoin mining is it's unique in that it's an interruptible process, right? It's like one of the few computational processes that has that interruptibility feature to it, where, like if you're doing behind the meter power sales or something like that, or power consumption, like, in Tim's case, I think it suddenly adds like all this grid stability. It's an amazing solution that, is a win-win-win for everybody. But I don't know, Tim, I don't know if you want to jump in and talk about your power price.
Yeah, sure. And, like Chase said, it's difficult to kind of nail down the power price, because it is variable. It's basically a variable cost of production. Natural gas is seasonal. In the winter, it's significantly higher than it is in the summer and in the fall. COVID's definitely had an impact on it this year. This year we had really no hedging in place, so we were really riding the spot market, which made us put us in a very, very good position. It just as recently as last month, we were mining for 1/3 of a cent kilowatt. So that was very very attractive for us, obviously, but that's not representative of our overall cost, average throughout the year. So when we're able to put on we're able to put on good hedges, we're able to lock our cost of production out multiple years at a rate that's, in the lower quartile of what you would kind of see for a mining operation. We see that's a huge win for us.
Tim, is that based on just the gas, like your gas purchase price? Is that the
yeah, the main driver is the gas purchase price, but there's also variable and operating costs associated with that as well. That's baked in. So yeah, like I said, it can be very very inexpensive. Just this past month or two, with storage being at maximum, and they're pretty much giving gas away in our region. So that's worked out well for us. But like I said, that's not indicative of what things are going to be like in the future. The other thing that we do, as I mentioned, with putting power out into the market, when gas prices are higher, power prices are also higher. So it's kind of there's kind of this weird interplay where, as gas prices move up, power tends to become more profitable. So then we can make more money selling power, to offset, the cost of our variable cost of production. So there's definitely some interplays there where it's not just the straight cost of production. There's a bunch of different revenue streams that we use to offset that.
That's super cool. Even like what you were saying, like, the startup time from 12 hours to 1 hour, that's like 11 extra hours of like peak capture that you're able to sell into the grid just based on deploying mining hardware.
Yeah, exactly. And it makes it so
really
we can pop up to 100 megawatts in an hour, and we can do that for a couple hours and then pop right back down. Whereas before, you can't plan a 12-hour start for a couple hours of production. So you would have to plan out, multiple days. You'd have to understand what the weather was going to be doing. It's a very, very different business model. This is much simpler, and the decisions are much easier.
Great. Well, gentlemen, I know that we're coming up on time here, so I wanted to just take a moment to thank you guys all for joining me on the panel today. If there are questions in the chat, please go ahead and fire those away. I think we've gotten to most of those that were asked, but if not, then we'll go ahead and pass it back over to Nathaniel, Chase, Tim, Steve. Thanks for coming on, guys.
Thanks for having us.
Thanks, everyone.
Thanks for having us.
Thanks. Yeah.
Thank you.
Thanks, guys. Thanks, Whit. And thank you again to all the speakers again for the second panel. There are a lot of new trends happening in the industry. We are really happy for this amazing line of speakers who are able to talk and give all these informative advice. For the third panel, the topic will be about operations and investment into mining. I'd like to introduce Ethan Vera, the co-founder of Luxor. He'll be the moderator for the third panel event. Thank you.
Thanks for hosting us, Nathaniel. Great. I'll kick it off introducing our speakers for tonight. We have a really good lineup and really excited to dive into some of these topics with these guys. So we have Abdul Malik Mirakhmadov, co-founder of PowerE. We have Mike Collier, CEO of Foundry Digital. We have Marek Okamoto, CEO of Marathon Patent Group, and Taras Kulik, Senior VP of Core Scientific. So to kick things off, maybe let's start with going around to every one of the speakers. We'll do a quick introduction of yourself. We'll discuss how the mining industry has been for you so far this year and what verticals of mining you're most excited with. So Abdul Malik, maybe let's start with you.
Thank you very much, Ethan. Thank you for inviting me to such a wonderful event. And I'm so fascinating to see how the Bitcoin prices reacts on this conference. And we see some changes over the last 2 hours. And my name is Abdul Malik Mirakhmadov. I'm a founder of a company called PowerE. We're a vertically integrated company with a captive power production. We have 4 data centers located in Kazakhstan, and we're mainly specializing on digital assets, HPC, as well as on AI operations. And at the moment, we're currently operating at 85 megawatts, and we are planning to expand our production up to 300 megawatts in the next couple of years. I can't hear you.
Great, thank you for that introduction. Maybe Mike, let's go to you next. Would love to hear more about what you're up to in the space and what verticals of mining you're most excited with.
Yeah, Ethan, thank you. Pleasure to be here, and thanks to Bitmain and Matrixport for the invite. So I've had the privilege of being in the mining space for the last 3 years, which in some hands seems like an eternity, and for others it's just a drop in the bucket. Got to live through the last boom and bust cycle, and which is exciting, and glad to still be here. It's an amazing space, and just a fast moving environment. So about a year ago, I got a chance to join the digital currency group, where Barry Silbert decided to create a business called Foundry to help institutional size customers get into the mining space. And so we've spent the last 12 months deploying a strategy around helping others mine in North America. So how do we grow the hash rate in North America? And we're really focused on empowering decentralized networks. So half our business is on the proof of work side with mining, and the other half is around proof of stake. So we've got a team of engineers. We're building out a lot of the infrastructure to help institutions in the staking part of the world. So that's a quick intro.
That's great. Thanks, Mike. And then Marek, maybe over to you.
Sure. Can you see me okay?
Yeah, looking great.
Okay, great. Again,
like the others, thanks for hosting this, you guys. We're excited to be here. And my name's Merrick Okamoto. I'm chairman and CEO of Marathon Patent Group. And I've been with Marathon since the fall of 2017. And like Mike, had the benefit of living through two significant downturns since we started mining in 2017. And it's really been this year that we have made a big CapEx expenditure. In the last 4 months, it's been in the news quite a bit that we've spent $50 million buying all new S19 Pro miners. We believe the future is really about low cost power and how you access that. So we formed a joint venture with a large power company, Beowulf, and that facility we are putting together is in Hardin, Montana. It's 105 megawatts. 2.8 cents is our cost for electricity, which is, we think, one of the lowest in the industry. And I think one of the real advantages there is it wasn't just about this facility. Beowulf partnership gives us the opportunity to access 500 megawatts of power. So we have space for growth. The miners we've already purchased will take 80 megawatts of that 105. So it won't take too many more miners for we're capped out at that facility, and then we'll be talking about our next facility. So I'm looking forward to talking about that more.
Thanks, Merrick. Yeah, that Beowulf announcement was fascinating, and really want to dig into that a bit later today. But right now, maybe let's pass it over to Taras to round off the introductions.
Hey guys, Taras Kulik, SVP Blockchain Business Development for Core Scientific. I've been around in the blockchain space since 2017, where I cut my teeth working with a principal of a family office out of the Caribbean, and I helped build one of the largest privately owned and controlled mining fleets globally with around 300,000 S9s. So I've been around the block. Core was a formerly largest client of mine. And then this year, took the opportunity to work with them. And 2020 has really been an explosive year when it comes to growth, opportunity, and obviously market interest and maturity of the space itself. We currently have approximately 300 megawatts in operation within the United States, with line of sight of up to 1 gigawatt. Lots of announcements coming out over the next little while. We've been fortunate enough to really be working really closely with Bitmain. We're now the official in-warranty repair center for North America. So Merrick will be seeing a lot of your units and all the other units that are in warranty within the US and Canada, obviously. Really happy to be part of this group.
Thanks, Taras. Can we talk quickly about that repair center for people who are unfamiliar with that? I think a brief description of what that means for North American miners would be helpful.
Yeah, so historically, when you had a unit go down in warranty, you'd need to pack it up and put it on a skid and send it over the sea. There was a facility in the U.S. previously that for one reason or another didn't necessarily work out. But Core is really excited to be partnering with Bitmain to ensure that we have the hash boards, we have the chipsets, we have all the specific components we need to make sure that when the S19s and Pros break down, they can be sent to a Core facility for a much faster turnaround time. So we're anticipating to be really ramping up over the next few months with the appropriate components to make sure that we minimize downtime and increase hash rate for the ecosystem here in North America.
Great, thank you for that. I think that's an amazing development for the space. I want to get into public companies, and so really want to understand the difference between public and private from investment strategy perspective, from a fundraising perspective, and from a valuation. So maybe we'll start with you, Merrick, but then anyone feel free to kind of chime in here with some thoughts on that.
Sure. Obviously, as a public company, everything we do is transparent. So we have to follow the regulations not only of the SEC, but we're a NASDAQ listed company, so their regulation and reporting requirements as well. And those reports include any 8K that we have to file of significant developments, as well as our 10Qs and our annual audited report, our 10K. So it's really easier, I think, for an investor to understand. There's a lot of people, everybody's kind of jockeying for position and growth of what's going on in this industry, particularly in North America, a lot of rapid growth. and most of those companies are private. So we don't really know what's kind of going on under the hood in a lot of those. And then you'll see an announcement that they've done something rather significant, and we all learn about it at that time. As a public company, not only do we report all those things, but it also gives us a unique access to capital markets. So we've done 2 financings in the last year. That's how we paid for the $50 million in miners that we purchased the S19 Pros from Bitmain. And that's also how we built out our data center in Hardin, Montana. So I view it as a benefit. There are disadvantages to kind of letting everybody know what you're doing, but it's also the access to capital markets for us. We think is very valuable to help us grow. We and our board made a conscious decision in July of this year that frankly we were right, and we bet that Bitcoin was about ready to have a very large up move. And if that happened, our experience taught us in 2017 that hardware prices would go up, shipment delays would extend, and it'd be very hard to get equipment because everybody would be chasing the capacity that Bitmain could build. So we made a conscious effort in July to buy 20,500 units from them, and really stepped on the gas pedal pretty hard. And then once we did that, then we announced where we were going to put them, which is a facility at Hardin, Montana. So now we're positioned for what we hope. We've lowered our cost of power dramatically. As everybody has said, the normal rate for most hosting is around 5 to 5.5 cents. We're at 2.8. And I realize there's a lot of people doing things with flaring and some new and unique technologies that I think may lower some of those costs eventually. But right now, we're very, very happy with that rate. It lowered our cost to produce a Bitcoin from almost $8,000 a coin down to under $4,000 a coin. So it puts us in a good position in the first quarter of 2021.
Thank you. You mentioned you did 2 financing rounds. Can you just quickly dive into the details of that? Were those equity rounds? What was the process like, and
Sure.
how does that differ from the private mining company?
So the first financing that we did was an underwritten offering with our banker, and the underwritten offering is you set a dollar amount, you file a prospectus, and you set a price on the night that you do the price, or the investors purchase the shares. They settle 2 business days later, and you get the capital. The other type of financing that we've done is called an at-the-market financing, and we use that more opportunistically. And I have a trading background at my prior experience running a large hedge fund in San Francisco. So when we see large spikes in volume in our share price, we're able to go out and access those higher prices, sell some shares in the open market, and we pay a very low commission of 3% to attain those shares. So it's a much lower cost. An underwritten offering can be 10 or 15% commission, 5% in cost, and all the expenses for legal and road shows and travel. So it's a very inexpensive way to raise capital quickly, and we don't always have to be in the market. We can use it opportunistically when our stock price presents an opportunity, or when we need money because Bitmain calls us and they have a large quantity of miners they can sell us. And we're able to access those and take them down very quickly.
Great, thank you for that. And this is an open question to anyone on the panel, but how do you guys see the public and private mining scape moving forward? Do you think more companies are going to start to go public, or do you think the public companies that are already listed are going to remain, and that's kind of set?
Yeah, I think.
Go ahead.
Sorry. Yeah, please.
Well, I mean, from a North American perspective, I think that the general consensus is that scale will win the day. I mean, Merrick's precedent on being able to acquire a facility, scale it up, is probably the right way to look at what's going to happen in North American mining. I can't speak to Europe or Asia or other markets, but certainly capital markets are going to be tapped a lot more frequently for some of the larger mining plays. With Core, with our capital requirements over the next, call it 3 to 5 years, we'll need hundreds of millions of dollars to build and continue building as we scale up to over 1 gigawatt of power consumption within our own facilities. So I think that is the next step, is for large players to consolidate and really tap the capital markets?
Guys, I think the world has fundamentally, I mean, crypto world has fundamentally changed over the last couple of years. And couple of years, I met with a few fund managers, some bankers, and most of them were quite skeptical about the cryptocurrency. The people were talking about, they were comparing the Bitcoin with a bubble. They talking about this a pyramid and it has no future and etc. And I think this year was quite challenging for the crypto miners, and we all know what's happened with the halving. We all know what's happened with the Bitcoin, what's happening with the Bitcoin prices. But I think the very important to note is that the whole attitude has been changed towards Bitcoin, right? And that gives a lot of opportunities for the private as well as for the public companies, right? And I think most of the many private companies. Let me talk for myself here. We are although we're a private company, but we follow the same regulations as a public company, right? So the company we have the transparency. We have it's audited by the Big Four. It's in line with IFRS regulations, and we are waiting for the high. I mean, we see what's happening today, but all the signs what's happening on the market, it gives good signs and it gives big push for the private companies to become a public as well, right? I think many companies are waiting for that, and we see that some big guys start to invest into the cryptocurrency. We see what's happening with, as example, the PayPal, right? And we really see that the Bitcoin start to become a more payment instrument rather than just a storing value instrument, and therefore we see that more and more companies. We expect some companies will go to public, and I think the market is going in that direction, and we hope that more we're going to see more investors in this field.
Ethan. Great, thank you for that. Yeah, Ethan, just to add on to the comments here, I think at the end of the day, it's all about access to capital. And being able to access the public markets in North America, especially in the United States, is a huge advantage. And it really, you know, it's another way of thinking about how do you decentralize the network, right? So all of Merrick's shareholders are now part of the mining ecosystem, right? So if you want to get into mining today, it's pretty challenging to go buy a machine and try to find a place to plug it in that has the right power. You could just invest in Marathon, right? And you can participate in that network. I think the other exciting thing that happened this year in North America is the idea of the debt financing. So, you know, that was one of our big products that we came to market with, providing financing for miners using the equipment as collateral. And that was a big help to a lot of miners in North America to get their operations to get to the front of the line, to get equipment and get the latest and greatest equipment. I think the other piece that's going to happen in North America is, you know, our energy grid is decentralized, and there's lots of private equity firms and hedge funds that own these power generation facilities. And I think mining is going to move closer and closer to power generation. And you see it with people like Atlas and Greenwich, or Beowulf, where all of a sudden the hedge fund guys and the private equity guys are going to go, oh, this is just another extension of our business, and they're going to be able to provide, you know, large sums of capital to continue to grow the space. And I think that's all super exciting for Bitcoin and you know, strengthening the network and securing the network. Great, thanks, Mike. And digging into those points a bit further, obviously DCG Foundries make huge headlines this year with large investments in that ASIC financing. Can you speak to specifically like a framework miners should have on considering raising various forms of financing, whether that's equity, you know, debt financing, ASIC financing, or how should a miner approach that, and when should they choose one method versus the other?
Yeah, great question. I think the hardest part with mining is being able to know when to get in, right? So, we spoke to a lot of folks early in the year where we said, hey, we think now's the time to upgrade from the old technology to the new technology. And if you want to get to the front of the line, now is the time to make the investments. And those that took us up on the offer, it's been just a tremendous year for mining, right? So it's one of these things where you have to be willing to kind of bet counter-cyclical, I would say. Back last January, February, March, all your online calculators, everybody would say this is a horrible time to get into mining. That's when we made our bets. We placed substantial bets. We've deployed over $100 million into the North American mining space. And it was one of these things where it's like, look, once the mining calculators say it's really good to mine, it's too late because there's no machines available. So even in the last 60 days, it's like an eternity in the mining space. 60 days ago, you could have bought machines for delivery in January, February. Now you're looking at May. And by the way, I say May, but that information is probably 24 hours old. It could be June by now. It's happening
Michael,
so
let's be
fast.
correct. It's July, man. It's July.
Yeah, there you go. Now it's July, right? Like, it's unbelievable how quickly it moves. So, I love the fact that Merrick was able to go out and raise a bunch of money and place that bet and get machines. I know other public companies have been able to do it. I think that's fantastic. I mean, the more people we have participating in this network and the more hash power we have, it just strengthens Bitcoin and it allows Bitcoin, I think, to go to that next level, right? So without the network backing it, it can't make that next big move. So it's super exciting.
Yeah, we're really seeing a professionalization of the entire ecosystem. As Mike mentioned, major institutions, major banks are looking at it, and there's a ton of substantial institutional interest. So the next 12 to 18 months are really going to be a game changer for mining. We're looking at a ton of consolidation in the space as the efficiencies required to be profitable really scale up. So it's going to be a busy time for the players in the space.
Guys, I think the financial institutes, they should also pay attention on the emerging markets, which has lots of preferences in terms of cheap power cost. Let me talk for Kazakhstan, for example. Right? Kazakhstan is one of the most developed post-Soviet Union countries, has fantastic regulations, and it's a super crypto-friendly, low power cost, fantastic weather. Barriers to entry is quite low, and the people, they like to work, and lots of hardworking people. So it's I give you example. We built the latest 40 megawatt data center just in a few months, taking into consideration that the winter is quite severe, it's minus 30, minus 40 degrees. But I came from the classical mining business, and I saw lots of big mining companies, whether it's BHP Billiton, Anglo American. So these guys, they don't afraid to invest the money into the emerging markets, and they really see the big profits in that areas. And but unfortunately, when you speak with the financial institutes, they're more focused on the North American, on the European expansions, right? So, but I think they should also pay more attention on emerging market, because so basically, so one of the major reasons why you invest is a cost of power, right? Which is quite low, and I always say, our being the lowest cost of producer, it gives us a possibility to die last when everybody die, right? Because if you look at the Bitcoin prices, when they came down to the below $5,000, so we're still making lots of money. And I think they should also put these countries on the radar, because this is a fantastic place where they can make lots of money. I just take into the consideration, taking the opportunity. I just give some thoughts about.
Yeah, no, absolutely. It's a really distributed global ecosystem. So Kazakhstan's a great place for mining. I used to mine there as well back in the day. Several tens of thousands of units, fantastic country, great people, great regulatory.
Thank you.
But mining really is a global ecosystem. And Mike alluded to it earlier that, the network stays stable because of this global distribution. And the professionalization of it and the access to capital will just reinforce that. The actual generation may not be, mums and pops or folks in basements mining anymore. It may be large organizations, but the shareholder distribution, that's the decentralization that's required for the long term.
Well, plus the protection of the blockchain, right? I mean, what's happening, if I had $1 for every time somebody told me in the last 3 years, I kind of like blockchain, but I don't believe in Bitcoin. And when you look at what's going on, all of the Fortune 500 companies now are rebuilding their infrastructure on the blockchain. And those transactions that are on the blockchain need to be confirmed. And that's what Bitcoin mining does. So we're supporting that infrastructure on a worldwide basis, decentralized, and it really makes it so the blockchain can survive. And as things advance forward now, just this morning, Sue Key, sales director at Bitmain, was talking about a next future product called the Ant Rack. Okay, so all of us in this panel just spent hundreds of millions of dollars to buy the new S19 Pro. It's the most advanced 110 terahash. It's a super powerful machine that 29 joules. What it produces compared to an S9 is just phenomenal. But now they're going to come out with an Ant Rack that will have 1 petahash of power. And the whole rack, he says, is going to be 7,200 watts of power. So what do we consume as blockchain Bitcoin miners? We consume power. So if I put 9 S19 Pros in a rack and they're 3,200 watts a piece, that's 32,000, 30,000 watts of power I need to put that together to get a petahash of blockchain Bitcoin mining performance. If I can now buy an Ant Rack that'll give me a petahash, and I can do it for 7,200 watts, I've just cut my power cost by 80%. And those are liquid cooled. So the environments that we all house these machines in, we all know we have to keep them cooled down. That's, the bane of being a Bitcoin miner is not having your miners overheat. So there I see a whole nother advancement. They have sent us 2 of these to test now at our Hardin facility, are coming to us. And we're going to be looking at these as our next deployment. So how much capital and how many petahash can you buy, and what's your energy cost to buy these new Ant Racks? And you'll be able to swap out fans, and it's just going to be so much easier to manage. They are now building product for the enterprise ecosystem, and that's a game changer. It's going to get big, much, much bigger. And as we all move closer, like what Marathon and some others are doing, next to a power plant where you have cheap source of power and super powerful mining networks, this is going to be a really big boom, I think, for the industry.
Yeah, it's a really exciting announcement by Bitmain there. Quickly on Abdul Malik's point, Mike, would love to get your opinion on investment abroad. I know DCG Foundry obviously has a very focus on expanding the North American and US-based mining ecosystem. Maybe if you can speak to what an investment would look like abroad, if that's something that you guys would consider, and how you think that will shape up moving forward.
Yeah, absolutely. So I think the decentralization of the network is the key point here, and we believe that probably in the next cycle, there's going to be more and more nation states that are going to be stepping back, trying to figure out what their Bitcoin mining strategy is going to be, right? So how do they utilize their competitive advantage around natural resources to mine Bitcoin? And I think our goal here is to build out the tools to help those countries work through their strategy, right? As well as as well as other power producers. And I think the power producers around the world are all going to be looking at these experiments that we have today around this concept of co-locating mining equipment next to power generation. And they're all going to be they're all going to be interested in it because, for us, it's all about producing Bitcoin. For them, just as Tim Rainey was talking about earlier, it really creates a more efficient power plant, and it allows them to do their core job even better. And I think that people don't understand the impact that's going to have on our power grids across the world. And the reality is, the Bitcoin algorithm is ruthless in its drive for low cost, and it's something we can't control. It just forces us all to find the lowest cost solution possible. And I think over time, it's going to lead to better and better energy production strategies. More green energy. It's going to push the bounds on how we produce power in the future, and I think that's pretty exciting.
Yeah, that's great. And then we're kind of a little bit all over the place here, but there's a lot of exciting topics to cover. I think Merrick's point on AntRack was fascinating. And Taras, obviously, Core Scientific has a lot of that traditional data center, infrastructure. So how does something like the AntRack affect Core Scientific's business? Is that going to be a game changer, or how do you see that?
Yeah, no, I mean, Core Scientific really is excelling at mass scale generation of BTC and other digital assets, right? So while right now BTC is the dominant protocol that we're working on, we're constantly looking at ways to expand and diversify our revenue stream. That being said, we're eagerly looking at new types of hardware, next generation configurations and setup. So we're not threatened by it. We're actually excited about how it can integrate into our existing operations and fleet. We're constantly looking at new sites to be able to expand our existing footprint. So something like the AntRack is definitely is on our radar. I think we've got a couple units coming down to our sandbox for R&D testing as well. But fundamentally, as it's been mentioned, the price for low cost, stable power is really the differentiator. I mean, even if you can get power at a cent per kilowatt hour, but you have to curtail every couple hours or every week or every month, that really creates instability in your operational overhead and your actual OPEX. So that may not be the best outcome for a long-term miner that wants to scale up. I mean, for us, stability in our hash rate is absolutely crucial so that when we deliver ROI for our customers, they can see it and that chart is nice and smooth.
Exactly.
Great. We have a few questions from the panelists here, so we'll jump in. Or sorry, from the viewers. We'll jump in, and then anyone feel free to chime in. So the first question is around treasury management. How should a mining operation look at accumulating Bitcoin on their balance sheet versus auto liquidation into USD? What's the governance structure behind that? I think all four of you probably have different answers here, so would love everyone's opinion on it.
Yeah, I'll take a stab at it first. So we have our own mining operation, right? So we have our own equipment. We mine quite a bit of Bitcoin, and we've been working with Genesis as one of our sister companies to work through kind of the treasury management piece of this. And we've been actively selling call forwards around our Bitcoin mining operation, experimenting with that, trying to figure out how to do this in the least risky way. We have the ability to lend. If we want to hold Bitcoin, we can lend it to Genesis and make some an extra interest off of it. Or we can take out fiat loans against the Bitcoin that we're generating, right? So to pay our hosting bills. I think, Leo Zhang just did a nice research paper, produced it yesterday around, I think treasury management is different depending on what cycle you are in the Bitcoin mining. And I think he did a really nice job laying that out. So there are times where mining and liquidating on a daily basis is the best way to go. timing the market can be very challenging. But we're, I would say in the general sense is most miners are really good at mining Bitcoin, and they don't think a lot about what do they do to make money with a Bitcoin that they mined. And there's this whole aspect of treasury management that I think we can help a lot of miners think through and help them, get a little extra, make a little extra return on their efforts. I don't know if anyone else.
Sure.
Yeah, no.
This is Merrick. I was going to say, it reminds me, it's an analogy. Okay, so this is just a new asset. It's a new commodity. But if you were a gold miner for the past 30 years, or if you were an oil producer, an E&P company for the last 30 years, and if you look back on what happened, oil went from $20 a barrel to $115 a barrel. And if you're a large oil production company and you're producing 50 million barrels of oil a month, when it went to $120 a barrel, what should you have done? You didn't know how high it was going to go, and you didn't know how long it was going to stay there, but proper treasury management would have been selling forward some of that delivery, would have been selling calls against some of that production. You would have been doing hedging techniques so that when oil ultimately went from 120 back to 50, 18 months later, if you're a CFO and you didn't do some proper management of making sure that you sold for next year or two some of your delivery at those high prices and hedge that decline, you're probably fired. And that's what's going to happen, I think, in this industry now as we start producing, this group that's just in this panel, the amount of Bitcoin that's going to be produced on a monthly basis in terms of dollars is just a massive number. And if we all hold that in inventory and it goes up, 100 million and then 200 and then 300 million in value, what do you do if we get one of these spikes that some people are predicting and goes to $200,000? Do you just, whistle Dixie and you're really happy and you're selling all the Bitcoin that you make that day? Or do you go out and sell forward a lot of the coin that you're going to produce in the next year? You're going to have to take action. And if you don't, I think you would be a disservice to your investors.
That's a great point, Merrick. Can you speak specifically to some of those derivatives you think are going to be useful for miners, maybe existing now and then in the future? Is that like Bitcoin derivatives? Is it difficulty or hash rate based?
I think the industry is really in its infancy. For example, what Cynthia Wu was talking about this morning, I don't know if anybody listening to this panel, if you heard her, and they have some excellent tools that allow you to go out and they have something called a leveraged bear, and you can go out and use some tools by selling forward option contracts, and you can sell delivery at a future price at a higher number. And if the price declines, you are still going to deliver the Bitcoin you produce at that higher price that you sold it at, as an example. These tools, I believe, in the near future are going to be available on your desktop, on a platform, and a CFO is going to be able to click on a button. And just like you look at an option platform now, where it shows you alpha and gamma and delta, and you're going to be able to say, look, this is 3x above its 200-day and its 50-day moving average. It's way overextended. This is where our investment committee has told me I need to go out and do some hedging. And those experts are going to take over and do the treasury financing in a department, while the other part of the firm is just doing the Bitcoin production. I think that's where we're heading. It's going to become very institutionalized.
Yeah, very much like a large gold producer that has the exact same situation, and a large petroleum producer. You have trading desks that are internalized so that they can maximize the output and productivity of their underlying commodity. Same thing's going to happen with BTC and large miners like a Marathon, eventually like a Core hopefully when they become public. But from Core's perspective right now, I mean, we really want to be a true hosting infrastructure provider. So we follow the research paper that Mike referenced earlier, in that we actually do daily liquidations so that we're not timing the market. We're really focusing on what we're good at, and that's providing a fantastic place to mine. So we're constantly liquidating. Genesis Trading is our partner, and they do fantastic work.
Thanks for that, guys. I know we're running up on time here, and we have a couple questions left, so we'll try and get through them quickly. One question is around Coinbase funds or Virgin Bitcoin, where the Bitcoin don't have they don't have transaction history because they're directly from the mining operation. Do you guys see that playing into your business at all within the next few years? If so, how?
If anybody wants to pay extra for virgin coins, call me.
Yeah.
I would love to sell you Bitcoin at a much higher price.
Yeah, there's been
Ethan,
stories around that. Yeah.
Yeah. So, Ethan, it's interesting that the question came up because it was one of the first, you hear about this in the market. And it was one of the first questions I asked when I got to DCG. I sat with the Genesis team. I sat with the Grayscale team. And I'm like, okay, how much more will you guys pay for virgin coins? And they just looked at me like, what are you talking about? Like, why would we pay extra for Bitcoin? So I really don't think there's any market for that out there. And like I said, if there is, feel free to reach out to me. We'll sell you some virgin coin.
Reach out to me as well here.
There may be regulatory changes where a lot more of the transactions that are built into the block are reviewed, but I don't think that's going to create a need for virgin coins. I think that'll just create a need for pools that are processing blocks themselves to be vigilant to ensure that all the transactions on the block are clean. That hasn't happened yet, but there are discussions around that, how companies like ChainSafe or Chainalysis can essentially help clean out some of the transactions that are put through on the block. But as Mike said, I mean, I would love to sell our Virgin BTC at a higher premium, but right now there isn't a market, even though there claims to have been one.
Great. And the last question here is around firmware. I think all four of you will have really good insights into this. How do you guys leverage firmware to date? How do you look at kind of the risk reward trade-off between the two? And like, is that something that you use right now or thinking about using in the future, specifically around kind of the third-party custom firmware that can do overclocking and undervolting?
Tell you what, I'll go first because the other guys will answer this for themselves, but I think that's really a product and tool used for kind of trying to maximize performance out of an older set of miners. So you might be using it on a 17 or something older than that. On a brand new 2000, an S19 Pro that's got a 12-month warranty on it. I'm not sure that I want to do anything that might jeopardize that warranty. So Bitmain really hasn't been very clear to us in any way, the conversations we'd had on that. But if I've got a 17 that's out of warranty and I want to overclock it, I think that's a good use of your software tools to get as much hashing out of that machine as you can. And for a brand new machine, I think you better just hook it up and run it under warranty and not try to overclock it. Taras probably knows better than I do.
Yeah, thanks, Merrick. I mean, the Core Scientific team has worked with some really good third-party groups to really flex and optimize older gen units, and we've seen incredible results out of them, very stable results as well. And as Merrick mentioned, I would never suggest to anybody to do that on a machine that's under warranty. But what you can do with older gen is you can really give them another, call it 24 months, as long as you're maintaining appropriate optimization, making sure that you're sticking within thermal bands that make sense, that you're not going to see, degradation of the hardware itself. Because at the end of the day, if you're still paying $22 a terahash, which 17 Pros are now going for, you definitely want to make sure that still has an ROI of 24 months. So it's definitely there. You have to do it properly, and you have to really tap into the right experts to do that, because it's not just low power or high power mode, and it's not just overclocking. It's true tuning at the chip level to make it a sustainable optimization and get the ROI that you expect. Great question, though.
Abdul Malik or Mike, any
Ethan,
thoughts on this?
If you energy below 3 cents, you don't really need to overclock. I'm telling you.
That's funny. That's funny.
No, we don't do that. We don't.
That's great. Well, I think we're running 7 minutes over time here already. This was a fantastic panel. Thank you to you four for joining on and sharing your insights. I think it was incredibly insightful. And thank you, Nathaniel, Matrix Port, and Bitmain for hosting us. This was a really great conference, and hope everyone learned a lot.
Guys, thank you very much. Guys, it was a great pleasure. Thank you. Thank you to everybody.
Thanks for participating.
Bye bye.
Yeah, so thank you, Ethan, and all the speakers from the third panel discussion. It's great that we're all able to get some insight from companies that have been mining operations all around the world. Aziz has given us an outlook on how seeing mining is done from different regions around the world. Like a Telegram group called the Mining and Investment Summit, Mining Investment 2020. So you could join that group, and then if you have additional questions, I think most of the speakers are there, most of the attendees from the events are there. So we could start this discussion over there, and of course, like build this new group together. So again, like we'd like to thank everyone for So we'd like to thank everyone for joining. Thank you again for all the speakers, media participants. Even during this time, during the coronavirus, it's good to know that the mining industry community can come together to discuss the current state. We see the technologies, new services, and the top experts all in one place. We look forward to meeting you again in person, hopefully. So thank you again, everyone. Thank you for Bitmain and Matrix Sport for putting this event all together.
Thank you.
Thank you, guys.
Bye-bye.
Thank you very much.